equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Market relief. Global stocks climb. A sell-off in bonds abates on easing concern over monetary policy. Earnings bonanza, Amundi and GSK top estimates, while ABN AMRO plans a buyback. We'll speak with the CEO of Swiss asset manager Vontobel in just a few minutes' time. Plus, a scandal for the crypto area. The DOJ seizes $3.6 billion in stolen Bitcoin and makes 2 arrests.
Now let's take a look at the futures, Tom, and it's very clear that actually we're off the lows in terms of volatility for now. Let's say for now for bonds, and so we're seeing a nice little lift to a lot of these stocks. And then we had a bit of state-backed intervention in China, which also supported Chinese stocks, and that's filtering through to Europe.
Yeah, the national team stepping in after the state media tried to persuade investors in China that things are looking up. And of course, the expectation is you're going to get further rate cuts. But nonetheless, there's a debate as to whether or not this is actually a bearish signal ultimately, whether it's a sign of desperation from the Chinese states amid the concerns about the trajectory of growth within China, the world's second largest economy, of course. So the US ended higher, Europe ended flat. Year to date, you are down about 5% on the S&P. Year to date across European stocks, you're down about 4.5%. The FTSE 100 is a standout, by the way, gaining 2.5% year to date. Let's see how things are playing out then. The CAC is currently gaining 0.8%, picking up that handover then from the US and Asia, where there is a positive session underway. The FTSE 100 gaining 0.6%, and the Spanish IBEX up at 57 points. The focus seems to be shifting a little bit away from monetary policy and much more to earnings, which broadly have been positive. We had a number of beats so far in today as well. A big day for those results. We also heard from Villeroy and the French central bank governor suggesting that maybe markets are starting to up and price in a little bit too much hawkishness on the back of the ECB and Christine Lagarde's comments. Let's switch it on and have a look at how things are playing out cross asset then. The story around bonds and the sell-off seems to be moderating now. So yields are coming off. The German Bund currently positive 22 basis points, 178 now on BTPs. That is one to watch. So down by 6 basis points. Bid for Italian BTPs, and the Greek 10-year at 248. Remember, it was comfortably above 250 just a couple of days ago, down close to 2 basis points. We are watching this story, whether this can hold. Ven Round from MLife says, Villeroy, there's no point trying to mop up spilt milk. Yields are going higher from here. Let's switch it on and have a look at how things are playing out as we look ahead to the US session. It's the CPI data out on Thursday that will be central for investors. The futures are pointing to gains of 0.3%. When do we break through 2% on the US 10-year? Currently at 193. Is that inflation print on Thursday the catalyst to get through 2%? Currently down 3 basis points. Brent at $90 a barrel. Just a little bit of selling around the commodity space. Will that be sustained? Down 0.5%. There's been some traction, it seems, in terms of the negotiations around Iran and whether or not they can get more barrels back on the market if they come to some conclusion. Still lots of question marks about that. The Bloomberg Dollar Index currently range bound, and question marks really as well as to why amid higher yields you aren't seeing more of a bid for the US dollar. So that, of course, the greenback and the implications for emerging markets still crucial. Francine?
Yeah, there's a great piece actually by our Bloomberg opinion saying that it's been a nightmare for some of the dollar bulls or dollar bears because of what's going on in bonds. Now, these are some of course, the sectors on the move. First of all, in terms of earnings, we had ABN AMRO, so look out for any kind of financial moves. Technology actually on the way up, so we'll have a good look at technology. It's right behind me, and it's gaining some 1.7%. It's actually the biggest gainer. Then we have media and some of the auto parts also on the rise. There's just one industry group, Tom, that's seeing a little bit of pressure. If I move out of the way, you can really see it behind me, and it's financials. The only group that's down some 0.2%. The picture there is not only on earnings, but overall, we look at, of course, some of the media space. Again, banks are so sensitive to what's happening with bonds. Maybe it's just a little bit of a readjustment after a pretty volatile, I would say, 6 to 7 trading days.
Yeah, correlation with those high yields, and as yields come off, maybe then a little pressure on the banking space. A number of guests that we have on the show over the last few weeks have said, look, there's more to go with the financial sector, particularly here in Europe. In terms of some of the individual names, again, a big earnings day. GSK then coming out and forecasting stronger profits for 2022. The broader story for this one is that they're looking to split off and spin off their consumer healthcare business. They've been under pressure from the active investors, Elliott, to do that. They say they are on track to spin that off this year. Currently gaining 0.5%, a beat for their fourth quarter. Equinor also a beat, returning money to shareholders. This is a familiar story now. These energy companies are just hoovering up the cash after a solid year last year, and they are passing that on to investors. Also saying they're on track around their transition to renewables. In terms of Akzo Nobel, the paint maker based down in the Netherlands, gaining 2.5%. A solid upside then for Akzo Nobel. It was also a beat in the fourth quarter, and they say they're managing the price cost, the inflation pressures. They expect those to ease by around the second half of this year. Just pointing out 3% gain for Equinor on the back of that higher dividend and returning cash to shareholders. We also want to look at what is happening, because of course this touches on inflation. Inflation, of course, central. This chart is really compelling, isn't it, Francine? Because what it tells us is the divergence between the market sentiment on inflation and the economists. So the economists are still forecasting, of course, a continued run-up in inflation. And again, we're looking at that potentially above 7% print in terms of US CPI on Thursday. But in terms of the swaps and what the markets are doing, they're starting to get a little bit more confident that inflation is going to edge down. And this is really prominent here. So the yellow line is showing the economic forecasts, and this is the US dollar 1-year swap, inflation swap. And you can see those coming low, this crocodile mouth shape, and suggesting, again, there's a bit of a disconnect between when the markets see things and the economists, Francine.
Yeah, what's interesting is also if you speak to a lot of central banks analysts or insiders, including some of the central banks, is that, for example, there's not much conviction from Christine Lagarde that her own forecasts or her own economist team are getting it right. If you look at the way that central banks, I mean, they have a team of like 15, 20 economists, but they've been getting it chronically wrong in the last 10 years, partly because of how we measure, of course, inflation. But it was interesting to see Akzo Nobel, Tom, as you were saying, that look, inflation will peak, but then come down into the second half of the year. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Stuck to its conservative profit forecast for the current fiscal year as it faces persistent COVID and chip-related disruptions. That's despite the world's top-selling car maker reporting an operating profit for the last 3 months of 2021 that easily beat analyst estimates. GlaxoSmithKline expects profit to rise this year as it prepares to spin off its consumer health business, its biggest shake-up in more than 2 decades. The UK drug maker says earnings are expected to rise 12 to 14% in 2022 on an adjusted basis. And we'll be speaking to the chief executive of GlaxoSmithKline, Emma Walmsley, later today. Don't miss that interview at 12:30 p.m. Shares of cybersecurity firm Mandiant have surged on a report that it's an acquisition target for Microsoft. Bloomberg sources say Microsoft is in talks to buy the company to bolster efforts to protect customers from hacks and breaches. A deal would add to Microsoft's range of products for responding to threats after it bought 2 smaller cybersecurity firms last year. Lyft's fourth quarter sales beat estimates. However, the ride-hailing company reported fewer customers than expected due to the spread of the Omicron variant. The US company saw about 19 million active riders in the quarter, lower than the 20 million expected by analysts. Sales were boosted by higher fares due to a driver shortage and a doubling in airport rides. That's the Bloomberg Business Flash. Tom, Francine.
Laura, thanks so much. Laura Wright in London. Now let's get into the key market drivers with our markets editor, Christina Aquino. Christina, a major question, which is actually our question of the day, and I urge everyone to go and check out our blog because it's just fantastic, is what's a bond bear market and are we in one?
Yeah, good question, Francine, because there's not really a standard definition, is there? Not in the similar way as it is to stocks, but it certainly definitely feels like a bond market for sure for anyone who's been a bondholder and a big bull in bonds all these years and suddenly having to cope with this sudden and massive rise in yields everywhere. It will certainly feel like a bear market. Now, the question is it going to last very long? I know that we're still watching for instance, the Treasury yields on the 10-year to hit 2%. That's definitely a big threshold that people are bracing for, certainly. But I think we are starting to see signs of the sell-off at least pausing, if not completely stopping. Definitely today, there's this feel of a bit of a pullback, perhaps hedging ahead of the CPI number in the U.S. tomorrow. tomorrow. That's going to be the next big one probably. But yeah, I think there's definitely this feeling now of this bond sell-off perhaps may not continue at pace because yields are at levels where it could entice some investors back into this market.
So it's 2% you're looking at for the US 10-year for obvious reasons. When it comes to the peripherals, the European peripherals, we're seeing a bit of a bid for those bonds today. So the 10-year BTP is currently down, what, 5 basis points or so. Is there a level? It's currently at 179, 180. Is there a level that we're looking at, that the markets are looking at for BTPs and Greek bonds that really would be a cause for alarm, would be the canary in the coal mine, which would bring us back to the nightmare of the Eurozone crisis that we might be looking at?
Yeah, I think it's definitely those levels that we saw during those crisis periods, Tom, that people are going to be watching out for. And certainly even in the more recent highs that we saw for Italy, for instance, during the 2017-2018 political turmoil sort of period. And these are kind of the markers that people are, of course, very wary of when it comes to the periphery. We're, of course, nowhere near those levels, but certainly something that investors have been keeping half an eye on. But, of course, as you say, we're getting a bid in the periphery as well. Again, part and parcel of this whole story of a bit of a breather for bonds after such a tumultuous last couple of weeks.
I mean, I have to say there's a lot of talk amongst the reporters of a certain vintage, I would say, you know, to memories staying in St. Agnes Square and thinking whether we need to go back in a similar situation also for some of the Italian bond yields. There's something else that you picked up, Christine, which really also caught my attention, which is basically the simple and hard question of, is the dollar now decoupling from Treasuries?
Yeah, we're certainly seeing that this time as well, Francine. And I think there's another element here that is playing into it, and that is, of course, what we're seeing relative to other currencies. Of course, I'm talking about the euro and the pound in particular. I think, you know, last week's ECB and BOE meetings were really seen as game changers, the ECB especially, for the euro. And so, of course, there's that offsetting effect of the euro gaining now that the ECB is kind of joining this potentially policy hiking cycle that other central banks are embarking on. And of course, that is at the expense of the dollar, which is moving down a little bit and decoupling from yields. But of course, there's absolutely still this thought of the Federal Reserve potentially walking into a policy mistake situation beyond the 2-year period that they're looking at in terms of their rates.
And of course, higher borrowing costs are a challenge for corporates who are heavily indebted. If they are heavily indebted, what are the balance sheets telling us about the strength amongst different corporates, different sectors when it comes to that balance sheet?
Well, Tom, there's definitely been a favor for companies and corporates that have been able to return money to investors. I know that you were talking earlier about the companies, you know, we've seen ABN AMRO, several energy companies giving back to investors in terms of dividends and returns, and investors love that, of course. And of course, the flip side is any company that is cash poor and highly leveraged is just looking very, very bad in this sort of environment, not only because of the fact that they're not able to give returns to investors, but also the fact that their leverage exposure really just makes them vulnerable in an environment of higher yields and higher rates.
Making the case for looking at fundamentals, as many of our guests say, look at the fundamentals of these companies within this changing environment. Christina Aquino, as ever, thank you for breaking down the key themes of these markets. And coming up, Vontobel profits soar. Talking of earnings, don't miss our exclusive interview with the Swiss Bank CEO, Zeno Staub. That is up next. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to The Open, everyone. 14 minutes into the European trading day. And of course, the focus firmly on what we heard from China, a bit of intervention out there that's supporting some of the Chinese stocks filtering through to Europe. But also we have so far a good earnings season, which has also given a lift to a lot of the stocks. In general, I have to say the sell-off in sovereign bonds that kind of spurred a lot of volatility is now on the back foot. And so it's bringing some relief to the markets that were a little bit on edge about how fast interest rates could rise.
And speaking of earnings, Swiss bank Vontobel has reported a more than 50% increase in full-year profit. Its wealth business saw total net new money for the year come in at 5.6 billion Swiss francs, still less than it generated in 2020. CEO Zeno Storb joins us now for an exclusive interview. The share is currently up 3.5% in today's session. It was a net income beat, sir. Net new money coming in lower than the previous year. How do these results set you up for the year ahead?
Yeah, we entered the new year with confidence. We had a robust start into the new year in 2022, both from a revenue as well as from a flow perspective. So we were off to a robust start.
Talk to us a little bit about market volatility. I don't know whether you could have done better in the market volatility that we saw towards the end of last year, and how you will rearrange and change things so that you take advantage of more volatility possibly to come in 2022.
Yeah, well, market volatility, I think, is driven by, and I can only recommend the blog of our fixed income boutique, 24 Asset Management, which put very nicely that you have actually 3 drivers, that where is the underlying economy in the cycle, where are central banks in the cycle, and where are valuations. And these 3 things did not fit very well together. And then I think December and also January, frankly, the market is gyrating and looking for a better consistency among these 3 drivers. I think we navigated the volatility well for clients, and we think that for high conviction active asset managers, what we are, this environment offers opportunities.
Okay, and will that lead to net new money increasing? What are your targets around trying to pull more money into the business in the next few quarters?
Yeah, well, first of all, we have now a very robust and repeatable track of strong organic growth, and we remain very confident and committed to our 4 to 6% annual organic growth target, and we're confident that we have the product range and the reach into the biggest investor pools across the globe to deliver that.
But Mr. Stab, if we come back to some of your equity strategies, because it was our understanding that actually, you were unable to participate in positive market developments in this segment in 2021 when it comes to equity strategies. Like, what exactly held you back, and how will that change going forward?
Yes, so what we do on the equity side for institutional clients, it's very highly concentrated, bottom-up fundamental strategies with a significant quality tilt and with a very low exposure towards momentum. And obviously, some quarters of the last years were not helpful to that. But we expect markets to become more rational and things will sort themselves out. And therefore, our style of investing also on the institutional equity side will come more into demand. So we're very confident that we will reach the 4 to 6% target over time.
How much of a benefit do you expect to see from a higher rates environment?
Well, first of all, we're an investment firm and not a bank. So as an investment firm, we may have different views on what the interest rates do to us. Net interest margin for us is around 5% of total revenues. So don't look at us as the classical highly leveraged bank that thrives on higher interest rates. Nevertheless, in the P&L, we would see some additional benefit from higher rates too. On the investment side, we would look into how far interest rates actually will go, as we offer a lot of very sophisticated fixed income products that actually help investors to navigate a lower investment environment. And we think the world in total will stick to the lower side of interest rates.
And I have to say, Mr. Staub, I mean, it's fair enough, but at the same time, you really make a difference between, you know, the adults that are investing in the children when interest rates go up and you can see more opportunities, but also more large misses. I know you have tried to expand in certain markets in the past. Is there a target? Is it Italy? Is there anywhere else in Europe that you want to grow, and how can you do that?
Yeah, so our biggest focus now for 22 is the US, actually, the biggest market in the world. We have made significant progress and geared up for further growth in the US in 21 by doing two things. First, we made a market entry for our Zurich-based fixed income boutique, and our sustainable equities and quantitative Westcar boutique will follow in 22. And second, we did an acquisition that we announced in December with UBS as we acquired their Swiss-based US client business. And we will close this transaction in 22, and with the closing of this transaction comes also a cooperation with UBS Americas.
Okay, just before we let you go, just getting back to the macro and the question of what's happening within bond markets, particularly around the periphery, is there a level in terms of the spreads, Italian over German bunds, that you're looking at that would be a concern for you, sir?
Yes, of course, we always have here in Europe a strong history of navigating this peripheral risk, but for the year ahead, we do not expect that especially Italy will get anywhere near to being out of control. Quite the contrary of it, the EU funds from Brussels are coming through, and the political situation in Italy has been stabilized with the decisions last week, so we are, for 22, very constructive on the periphery, especially Italy.
All right. Thank you so much for joining us, Zeno Staub there, the Vontobel Chief Executive Officer, and we're delighted to have Bloomberg behind you, so you have to come in the studio here in London next time. Coming up, Amundi reports a huge beat in its fourth quarter cash inflows, still faces intense competition from the likes of BlackRock and Vanguard. So discussion, the Chief Executive up shortly. This is Bloomberg.
exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Welcome back to the Open, everyone. Let's stay with earnings. And Amundi has reported a cash inflow of over 65 billion euros for the fourth quarter, nearly 4 times analyst expectations. Well, we spoke to the chief executive, Valérie Baudson, in the past hour.
2021 was a remarkable year for a number of reasons. We've reached the 2,000 billion milestone, thanks to the acquisition of Lyxor, of course, but also, as you were mentioning, thanks to a great commercial momentum. We raised 75 billion in medium long-term assets, which is actually a record, with all the categories of clients, but especially with our distributors worldwide. Amundi has around 600 clients, which are distributors around the world. And the dynamics was very important at the end of the year. Of course, one of the reasons being that the markets were still booming at the time.
You say you've done this good performance because you expected inflation to come in higher. Are we now in a bond bear market?
Well, once again, I think, and I remain very optimistic for 2022 for Amundi. Our portfolio manager have anticipated this situation. They are actually diversifying our portfolio to make sure we keep the savings of our clients safe. And these rotations are important, both in emerging debt, for instance, or in value equities.
Let me ask you about bond market movements. Clearly, we've seen the markets adjusting quite quickly to this new rate expectation, Valerie, in recent weeks. Does the pace of the movement in bond markets alarm you? Does any of the spread widening that we're seeing in bond markets alarm you?
Well, once again, it's an important topic for the industry and for our portfolio managers, but I'm extremely confident because what is important in this kind of situation is to make sure you diversify properly your portfolio. 2 elements of reassurance. The positions of our portfolio have been short durations for a very long time now at Amundi. And second, the bond portfolios we have are incredibly stable because they are mostly with our insurers clients.
That was Valérie Baudson, the CEO of Amundi. Coming up, plenty more to dissect in the markets. Emmanuel Gort, Barclays Head of European Equity Strategy, joins us. This is Bloomberg.
Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. This market relief, while global stocks climb, a sell-off in bonds abates as easing concern over monetary policy continues. Earnings bonanza Amundi and GSK top estimates, while ABN AMRO plan a buyback. We'll break down the dynamics in equity markets with Emmanuel Koh of Barclays. Plus, a scandal for the crypto era, while the DOJ seizes $3.6 billion in stolen Bitcoin and makes 2 arrests. I know this is a story that we were talking about this morning. It just keeps on giving, so we'll go through the intricacies of it a little bit later on. But on to the markets.
Yeah.
China supported, Chinese markets getting a lift, and that's filtering through to Europe.
The national team coming in to China, stepping in after the state media said and appealed to investors there, saying, look, the picture isn't that bad. Have a look at these equities again. But of course, the concerns are around the trajectory of growth in China. Economists, of course, forecasting further cuts. Maybe that will be supportive in the next weeks and months ahead for China. You had a decent session overnight in the US, so that handover, and then Asia and the pickup. The futures are pointing to gains. We had a solid session so far in the first 30 minutes of trade here in Europe. Currently up 1% across the benchmark. The focus seeming to shift away from the monetary policy, at least for now, and the focus on earnings, which have come through pretty well. You've had a pretty decent set of earnings. We've had more come through the likes of Akzo Nobel, Equinor, and GSK this morning, just to name a few. And that is supporting these markets. You had Villeroy, the French bank governor, also stepping up with some comments, seemingly wanting to soften the edges of the concern around the rate hike policy from the ECB. Our MLive team, though, say, look, the trajectory of yields is higher from here, but for now, you're getting a bit of a bid on things like BTPs and Greek debt as well. So a bit of calm across the bond markets. The DAX is gaining 0.9%, up 140 points. The FTSE 100 up 0.4%. Worth reminding viewers, the FTSE 100 is the outperformer, year to date, gaining around 2.5%. Let's switch it on and see how things are playing out across these sectors as well. Sector by sector. Before I stepped over to the wall, every single sector bar one was in the green. We'll see if that continues to be the case. You've got 2 sectors in the red, but only marginally. Basic resources, range-bound. Banks are down 0.6%. As Francine was saying, maybe that is down to the fact that yields are kind of coming off around the edges. We haven't burst through 2% yet on the US 10-year. We'll see if that changes on the back of the CPI print that comes out Thursday. The estimates are for an above 7% number. Technology gaining pretty strongly in the session today, up more than 2%. Autos and part auto above 2%. And so you're seeing a decent session across these sectors. This is really about earnings for now as the angst around the bond market starts to ease, Francine. And we have a terminal chart that shows Some optimism, at least. The call by JP Morgan, putting them squarely on the other side of the call from Morgan Stanley and Mike Wilson, who says this is now the winter season for stocks. JP Morgan says they've looked at the VIX and they saw a signal on January the 25th where the VIX jumped and was more than 50% above its monthly moving average. It's 1 month moving average. For them, they say that is a clear signal to buy stocks. And you can see that call, January the 25th. That is where it came in. So they think there's an opportunity now, Francine, to get into stocks. They say this has never failed. Out of a recession, this call and this key marker has never failed.
Tom, this is without a doubt actually my chart of the week, because what they call it, I think, is like a bulletproof indicator, which I have to say is a pretty bold call. So they're looking at moving averages. Your chart is wonderful because it really explains it. It's basically if you have the VIX rising more than 50% on a 1 month moving average, which it did last Jan 25, JP Morgan says buy some stocks. Now joining us now to look at his bulletproof indicator, Emmanuel Coe, head of European equity strategy at Barclays. Emmanuel, I mean, we're in the kind of market that it is good to look at indicators that you identify as a buying or selling opportunity. Is there anything in the market right now that you think signals more strength to come for stocks?
Yeah, hi, good morning. Well, I think positioning is a support to the market. We've seen a lot of fast money, systematic de-risking at the end of last year and in January. So we're seeing a lot of flows has left the market, and we do find fast money basically selling, basically close to capitulation at the end of January. So one of our signals to buy the dip was very much this capitulation from systematic investors. And at the same time, look, more fundamentally, we do think earnings are basically acting as a support to the market. There was a lot of stress coming from the rate market. We see now a lot of hawkishness is priced in. At the same time, we do believe that earnings are still coming strong in Q4, and that should somewhat give a bit of fundamental support for investors to step in and act on some of these oversold indicators we flagged at the end of January.
Yeah, Emmanuel, how distinguishing do we have to be across these earnings? How much of a case is there that a lot of the sales have been pulled forward as a result of the pandemic, and that is going to start to ease as a theme in the quarters ahead, and that these margins that they've managed to maintain broadly across these sectors are going to start to be more challenged?
But I think so far the takeaway from the early result is that demand is here, demand is strong. We have companies talking about cost, talking about supply disruption, so the margins angst is not going away, and in some cases is kind of worsening, right? So I think this is a key concern for the market, that some of these over earnings we had in the last year and a half is not sustainable and will be held by the ongoing supply disruption. But at least we know that the demand side is fine, is strong, is resilient. Now, if you look at 2022, well, of course, earnings growth has to decelerate. We had 60% EPS growth in Europe last year. You don't get that many times in your career, right? So this year, if you look at consensus, it is looking for 6% EPS growth in Europe. We think this is a fairly low number. This is lower than usual. And at the same time, you have consensus looking for GDP growth to be above trend, to be above 4%. So there's something wrong here.
Right.
If we get indeed a fairly strong economy, we think earnings will grow more than what the market expects.
Emmanuel, talk to us about the correlation between bonds and stocks, which, especially when you look at Treasuries and some of the U.S. stocks, it just was not like it used to be. Does it ever go back to a pattern like we saw in 2010, 2015?
Well, I think the speed of the moving rate has been the key pressure point for equities this year. We had a massive repricing in the real rates in a matter of days or weeks. And what we've seen in the market is very much a valuation adjustment between the expensive, long duration growth stocks and the cheap value part of the market. So you've seen simply a rotation from one part of the market to the other, which has come with meaningful dispersion at the sector level, at the stock level, and even within regions, with Europe doing better than the US. I think the question is whether, well, firstly, central banks will act on what is priced in. We think, as I said before, there's a lot of hawkishness in the price, and to some extent now, we do believe that central banks have a bit more optionality. If we get inflation slowing, as we expect, into the second half of the year, we might be in a position where central banks don't need to over-deliver on this hawkish expectation, which could be a relief to the market. At the same time, what we've seen in the past is that in most occasions, equities can perform in the backdrop of rising rates, again, as long as rates go up for the right reason. And I think this is why the earnings discussion is very important, because what we are seeing this year is earnings so far giving a bit of fundamental support to the market to absorb this rate normalization.
Yeah, just Emmanuel, help us understand where we are in this rotation.
Well, we think we are quite advanced, and we do think the bulk of the rebound in yields is done for now. I think the next few data points on inflation will be very important. CPI tomorrow will be very important in the US, for example. But I do believe that, you've seen in a matter of weeks a significant shift away from growth to value. And to some extent, if yields stabilize, I think this rotation will stabilize as well. I think what is a clear inconsistency in the market at the moment is, on the one hand, a lot of, I would say, cautious signals with the curve flattening, with credit spreads widening, with peripheral spread widening, and to some extent with the equity market off the highs. But at the same time, investors buying risk on the value sectors like banks, autos, commodities, and something has to give at one point. I think the only way we can have a more sustained value rotation is in a bullish macro environment, i.e. rates going up for the good reason, market getting more comfortable with the outlook. Hence, this leadership can be sustained if we have a favorable macro environment. If we see the economy slowing, I'm not sure your deep value sectors will not perform for very long.
Okay, a really important distinction there to be made by Emmanuel Coll, head of European equity strategy at Barclays, who stays with us. More calls after the break. Coming up, the EU's digital chief, Margrethe Vestager, shrugs off Meta's threats to leave Europe, saying ditching Instagram would free up 20 minutes of her day. I feel like it'd free up a bit more of your day, Francine.
I mean, definitely, we should do a poll. 20 minutes seems like she has a great account, Commissioner Vestager, on Instagram. And I feel like for some people it'd be 2 hours. My return on investment on Instagram, I have to say, is probably, not something I'd buy into because it's so poor, given the amount I spent on it and how many tractions.
Follow Francine Lacroix. It's a great account. Forget about the EU Commissioner. She only dips her toes. Francine is all over it. Okay, stay with us. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Welcome back to the Open. We are 43 minutes into the European trading day. A solid day, a solid session so far, 43 minutes into the trading session. Stock 600 is gaining now 1.2%. 1.2% after a decent day on Wall Street. Every single sector here in Europe is up, apart from banks, autos and technology, well above 2% currently across the sectors. And you've got a bit of a bid for these peripheral bonds as well after the sell-off that we saw at the early start of the week. So yields on BTPs, 10 years down 7 basis points, on Greek 10 years down 2 basis points. That is the shape of play across these markets. 43 minutes into the trading session. Francine.
Now, Tom, the argument between Facebook owner Meta and Europe has been heating up. Now, Meta is saying it has absolutely no desire to withdraw from Europe after warning that data transfer rules pose a threat to their ability to operate on the continent. Now, the EU's digital chief, Margrethe Vestager, told our Maria Tadeo that ditching Instagram would free up 20 minutes a day for her.
I'm on Instagram, and if it doesn't work anymore, that would give me maybe another 10, 20 minutes per day. It's for every business to consider if they want to do business in Europe. This is not for us. This is for them to do. And I think it still remains to be seen. Europe is a very attractive place to do business. I have learned, at least in politics, is that you should never threaten to leave. You should always threaten to stay.
I mean, 20 minutes a day, I feel like it would free up half my day. I know Tom McKenzie, says, half a day, maybe you should rewire your priorities and maybe do something else that's more fruitful with your day.
It's the reels that are so addictive. You just get sucked into that world. It's hard to pull yourself out.
And then it takes me like 3 hours to do one. Now, for more on all of this, let's bring in Bloomberg's Maria Tadeo in Brussels. Maria, first of all, no matter how serious the threat from Meta is regarding its European operations, it certainly has everyone talking about whether they could live without Instagram or Facebook.
Look, there's already a big debate as to whether or not we should be ditching social media or not, whether we're spending too much time on the phone. The commissioner there, Maria Vestager, and this is the head of digital for the European Union, she's not worried about it. She said, well, there's no Instagram, that's fine. I get 20 minutes out of my day free. But the reality is that this is a spat that's getting very nasty between Facebook and the parent company Meta and the European Union. Now, just to give you some context, Francine, this goes back to 2020. Remember, the European Court of Justice said they had concerns about the way the data from Europeans is transferred to the United States, and they wanted changes made on that. There has been a whole back and forth for 2 years as to what do we do with this data transfer. Now, Facebook did say if we're not able to continue to transfer data the way you have until now, we're not going to be able to operate the way that we do, and that would affect Instagram and Facebook. Now, this is getting a lot of heat in Europe, a lot of government reaction to saying, if you want to leave Europe, the door is open, goodbye. So this is now where they're doing a little bit of damage control, saying, we don't want to leave Europe, we like doing business in Europe, but our concern is the way that we transfer data, and we should have a real conversation about that. The problem for Meta is that it really is a European regulator that holds the entire cards in this negotiation.
Mm-hmm. Okay, that's software, that's digital. What about hardware? The European Commission coming out with its plan for chips, semiconductors. This is so important, Maria.
This is a huge story, Tom, and if you look at the numbers that have been put out on the table, the estimate of how big this CHIPS Act could be, you're looking at 40 to 43 billion euros in the space of 10 years. So this is really huge, and the idea behind this is that the European Union wants to do a lot more when it comes to chips, but also semiconductors, and bring it back to the EU. Now, they say that, again, they want to multiply ×4 the amount of semiconductors that are made in Europe. By 2030, they want to account for 20% of all global production. So the numbers are really astonishing, and this is a very important story. A lot of this, of course, has to do with the politics. They want to almost break away from this dependency on Asia and China and make it here. Having said that, there's real concerns about state aid, but also who is going to provide for this money? Is this going to be public, private, and how do you get the two to work together? 10 years seems a lot, but actually when you look at this kind of money, it's not a lot when it comes to the implementation.
Okay, Bloomberg's Maria today on the ground with that plan from the EU Commission around semiconductors and the response to Meta and its threats as well. Emmanuel Corr, head of European Equity Strategy at Barclays, is still with us. Emmanuel, part of that response from the EU, as Maria was saying, is a reflection of what's happening in China. And in China, many investors say follow the policy. Can you follow the policy in Europe? Would you invest in the semiconductor space on the back of some of this?
Well, I think the long-term outlook is probably quite supportive. We know that the EU wants to increase spending on digitalization, increase investment in productive assets. So probably the direction of travel is very supportive of of the industry, and we still have an industry which is undersupplied, by the way. So we do believe that the profitability outlook is still relatively strong here. Now, I think what we've seen year to date is, again, the sector being kind of caught by this kind of rotation, and whoever is expensive these days is not being given the benefit of the doubt. But from here, I think after this big rotation, I think fundamentals should prevail again, and the market should make a big difference between unprofitable tech, which is very much a liquidity concept and which will probably be under challenge in the months to come, and the profitable tech, which is still probably quite expensive but has strong favorable earnings outlook, and we think semis are part of this group.
Emmanuel, when's the right time actually to start positioning for a recession? I don't know whether a recession could come because of a policy mistake from central banks or whether that's where we are in the cycle.
Well, I think if you look at the key signal, it has to come from the yield curve. And the curve is flattening. We have a bear flattening of the yield curve at the moment. And clearly this is something which usually signal that growth is slowing and we're in this kind of mid-cycle transition. But a curve flattening is not an impediment to strong equity market return. This is a very classic phenomenon. What would be much more of a red flag is the curve inverting, because what we found is that every time the curve inverts, the 10 to 2 year curve in particular in the US, it is followed by a recession. So a curve inversion is a very strong sell signal for equities, but we're not quite there yet. And we do think the curve will flatten this year, but won't invert. So probably a recession is not on the card before late 2023 or maybe early 2024.
Okay, so watch the curve inversion. Where is your regional preference across the European space at this point, Emmanuel? If you throw the UK into there, the FTSE 100 outperforming, do you see that sustaining itself? Do you look at other jurisdictions?
Well, I think the UK has been a beneficiary of very favorable sector composition year to date with value basically and no tech. So from here, I think this rotation will probably mark a pause, and you might see less of this extreme dispersion between growth and value, assuming rates stabilize. So UK makes complete sense in terms of giving you a fairly broad sector exposure, a very cheap sector composition as well with a lot of value. I think periphery is something to look at, in particular if the ECB is somewhat coming to the rescue again and start to talk down the very hawkish expectation priced in. Probably DAX is something to look at. We do expect China to improve down the road, to stabilize, and that's something which could somewhat give support to the some of the exporters there.
Fabulous. Thank you so much for joining us. Emmanuel Cauder, Head of European Equity Strategy at Barclays. Now, coming up, the U.S. has seized about $3.6 billion from Bitcoin theft. We'll bring you that remarkable story next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon. Can ESA help humanity take its next giant leap?
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open, everyone. 53 minutes into the European trading day, and we're seeing a bit of a lift to these European stocks. You can see gaining some 1.4% for the DAX, the CAC, the FTSE 100 gaining 0.8%. The picture is a bit support from China that's lifting Chinese stocks filtering through to Europe, and actually we didn't see the craziness that we saw in the bond markets, and so that's also giving hope that actually tightening will not hurt everything and, you know, the broader market in their way.
I want to mention the Bitcoin, by the way, is at 43,476. I'm mentioning that because we have the crypto story of all crypto stories. The US Department of Justice seizing about $3.6 billion in Bitcoin, what it calls the largest financial seizure ever. This story is amazing. The crypto tokens were stolen during a 2016 hack of the Bitfinex currency exchange. The Justice Department says it's arrested 2 people. Joining us now is our Asia crypto czar, Joanna Ossinger. Joanna, break down the details for us. What is the significance of this case? It sounds enormous for the DOJ. I've got so many questions.
It is amazing. And of course, keep in mind that the Bitcoin was worth about $71 million in 2016. But of course, crypto has risen so much in price since then that the total amount was $4.5 billion. The Justice Department seized that $3.6 billion. So also what this reminds us is that even though there's a lot of discussion about illicit activities using crypto and nefarious deeds, actually crypto is somewhat recoverable, say more so than cash might be, and it's more traceable.
I mean, this is just amazing. You know, she built herself the crocodile of Wall Street. I think we have a picture, so I hope that we can put it up for our viewers. She called herself Razzle Khan, a surrealist artist and rapper with tattooed hands, and boasted that she had more pizzazz than Genghis Khan. I mean, just on that note, I just find it, like, you know, wonderful. So
this was her and her partner, right? And they described the top line of the Bloomberg story is fantastic. They are, to hear the Feds tell it, a Bonnie and Clyde for the crypto age. Just tell us more about this couple. What do we know about them? These are allegations, of course. We should remind our viewers of this. These are still allegations, hasn't gone to court, but this is what the DOJ is alleging. What do we know about the couple?
Yeah, well, clearly they were interested in crypto. I mean, the people that are involved here were they were hiding in plain sight, basically, and were talking about crypto and giving presentations, talking about social engineering. I mean, they were apparently living a pretty decent life in the past few years. You know, they had gotten some of the money out into gold, into gift cards, but clearly they didn't get it all out because DOJ seized some, but they definitely seem like a pretty colorful couple here.
Thank you so much, Joanna. I mean, this is an amazing, amazing story, and of course have repercussions for how some of the things also get regulated, possibly. Now, that's it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
On Instagram, and if it doesn't work anymore, that would give me maybe another 10, 20 minutes per day.
We cannot have the same sort of lockdown you see in the mainland. That's just not possible in Hong Kong.
I think there's a profound lack of appreciation for how dangerous the market is.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Market relief while global stocks climb, a sell-off in bonds abates on easing concern over monetary policy. Moscow undercuts Macron, well, saying no deal was reached with Vladimir Putin at a meeting Monday in Ukraine. We get the latest on that. Plus, stay with Bloomberg Surveillance Early Edition, because this hour we speak with Sweden's Handelsbanken Chief Executive Karin Ackerstorm and to BlackRock's Vice Chair Philip Hildebrand. And you can send in your questions for both of these fabulous guests on IB Plus TV Go. But first thing is first, so let's check in on the markets. And we're seeing not only easing when it comes to some of the stock markets, but also a nice lift on for technology stocks, gaining some 2.4%. Overall, the European stocks gaining 1.4%. The focus, actually, if I look at the industry groups, I think they're all on the upside, apart from one that's down very, very little. The focus is, the bond market and the fact that we're seeing stabilization there, and that's giving a nice lift to some of the markets overall. The U.S. 10-year yield, I know there's a psychological level of 2%, which we could see quite quickly. The main question that we have for a lot of our guests today is, are we now seeing a bond bear market? Remember, it's very difficult to define a bear market in bond because it's something that's usually attributed to stocks. But the U.S. 10-year 1.92, and then the Italian 10-year also getting a little bit of support. Now, part of the reason why we're seeing support in the markets is really what we've seen from China. Now, China's national team have said to be buying some local share in the stock market. So this is what we've seen over the last couple of years in terms of state intervention. Yesterday, I think, was one of the first times that they actually, did it whilst the market was still open. So it could have an impact on what they're thinking. Again, this is divergence. A lot of the Western world going into tightening, and of course the PBOC and some of the Chinese authorities not doing so. Now, to talk about the markets, we're joined by Geraldine Sundstrom, portfolio manager for asset allocation strategies at PIMCO. Also with us, Christine Aquino from our Markets Live team. So thank you both for joining us. Christine, let me kick off with you. I know one of the million-dollar questions that you pointed today is we need to try and figure out whether bonds are in a bear market. And it's not as simple question as it sounds.
Absolutely, Francine. Again, as you mentioned earlier, there's not really a strict definition for a bear market when it comes to bonds, but certainly if you have been a bond investor trying to time and ride these markets the last couple of months, it would certainly feel like a bear market, given just the speed and the levels at which we got to, especially earlier this year. And so, yeah, it really is probably feeling like that for a lot of bond investors, but it seems like, at least for today, the price action is suggesting that they're getting a bit of a breather. So perhaps that bear market feeling is abating a little bit, at least in the short term.
Yeah, so what's your take, Geraldine, on what we see actually in terms of bond bears? Are we in a bond market, and is there a psychological level about the spread? I don't know whether it's Treasuries or the spread between Germany and Italy that actually makes you worry about what's ahead.
Good morning, Francine. Well, I would say that bonds now are coming to a place where, you know, the inflation picture is getting priced, the central bank reaction function is getting priced. And really the question is, by the end of this year, you know, how will lower growth, higher supply, and all the accumulation of global central bank hikes bring us in terms of picture? We would think that by the end of the year, chances are that the inflation picture is going to look a lot better and that things are going to calm down. The first few months of the year were always going to be very volatile.
Thank you for that. And actually, you know, when you look at some of the volatility, what's it mean going forward, Geraldine? Can we see a bit of support, or, you know, does it mean that the volatility will abate? Is it just teething problems because of the communication for central banks, or could we see 2022 where volatility is out of control?
I think it's going to be data dependent. Central bank have said that they have very little clue of what is going to happen. This is an unprecedented environment, and inflation data is going to be the driver. We can also look at what's going on with oil prices. We know this is a big driver of inflation and inflation expectation as well. So the next few months, there's very little that is going to reassure markets. It takes more than one data point to create a trend. So we think it's going to be really from the second quarter that markets are more likely to calm down. At the same time, you know, there's so many hikes you can price within 1 year, and we're getting towards the maximum that is physically doable for 2022.
Christine, talk to me about, you know, the dollar a little bit. Is it decoupling again from Treasuries, and what does it tell us about broader market sentiment?
Well, Francine, yeah, we're definitely seeing this resumption of the decoupling in Treasuries and the dollar for certain. And I think that really speaks to two things that's currently happening in the markets. One is, of course, this idea of a potential policy mistake that the Fed may be walking into down the line. As Geraldine says, you know, there's only so many rate hikes that markets can price before they start thinking about, oh, how does it actually affect longer-term growth trajectory? And then the second thing, of course, is what's happening elsewhere in the world when we're seeing the ECB and the BOE catching up to this hawkishness that the Fed, in a lot of ways, has led the way in. And now we're seeing that flowing through to their respective currencies, the euro in particular, really feeling like that ECB meeting last week was quite a game changer in helping the euro really catch up to the dollar. And of course, it will be at the expense of the greenback.
Christine, also give me a sense of, you know, some of the things that we're looking for in the earnings season is actually what it tells about the balance sheet of some of these corporates.
Absolutely, Francine. We've seen time and again in this season that any company that is able to return or give returns to investors via either buybacks or dividends are very much being rewarded. And so the flip side of that, of course, is the fact that any of these highly levered companies that have very poor cash flows are being punished as well. And we're certainly seeing extra vulnerability in that for these weak balance sheet stocks, especially when we're entering into a period of higher rates and higher yields.
Geraldine, when you look at some of the things that, you know, are out there, is the market getting ahead of themselves when it comes to ECB expectations?
It's hard to tell. There might be a desire from the ECB to get back to zero, but really looking at the fundamental picture, I would say that maybe a little bit. But, you know, situation can be very fluid when you are in negative interest rates. We'll have to see. We think that the inflation picture in Europe is looking far better than it is in the United States.
All right, thank you so much. Christina Kino from our Markets Live team and Geraldine Sundstrom, Portfolio Manager for Asset Allocation Strategies at PIMCO. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour, we speak to Sweden's Handelsbanken Chief Executive, Carina Ackerstam, and to BlackRock Vice Chair, Philip Hildebrand. Up next, we discuss more earnings news with Geraldine Soomstrom. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, let's take a look at some of the events that we're following today at 12 p.m. UK time. Well, it's Brazil CPI. After a small decline in December, 12-month inflation should tick up in January. Then, at 1 p.m., this is about the Bank of England. The chief economist, Hugh Pill, due to speak about UK monetary policy. Later this afternoon, we're also expecting some Russia CPI. One of the biggest inflation concerns has been coming in from Russia. It'll be interesting to see what that means, whether it continues to accelerate, keeping the central bank on a course for further monetary tightening. And then at 5 p.m., we have, of course, the Fed. Loretta Mester from the Fed set to speak on policy at a seminar hosted by the European Economics and Financial Center. And finally, the big one in earnings in the U.S., Disney actually releasing quarterly numbers after the close of regular trading. So diplomatic efforts are continuing now across the globe to de-escalate tensions over Ukraine. Fresh from talks in both Moscow and Kiev, the French President Emmanuel Macron landed in Berlin to meet with German Chancellor Olaf Scholz, who had just returned from Washington, where he met with President Biden. So for more on all of this, we're joined by our European correspondent, Maria Tadeo in Brussels. And Maria, thank you so much for joining us. Scholz in D.C., back to Berlin, Macron, 4 cities in 24 hours. How much was actually achieved, though?
Well, this was a marathon day yesterday, Francine. And, to answer your question, I would put it in 2 ways. One is the optics of this. It's full diplomacy. The Europeans united half across the world to try to get a resolution on Ukraine. So when you ask diplomats how much was achieved, they tell you that in this instance, the optics really matter. They needed to show that Europe was serious about their security, and that meant really traveling half across the world to speak with their U.S. president, but also the Ukrainian president and Vladimir Putin. On the actual substance, that's where it gets a little bit more complicated. We know that Russia says we gave no assurances to anyone that we're going to pull back our troops. We also know that the exercise in Belarus, that was due to come to an end. So that should not be seen perhaps as relief from that pressure that we've seen from Russia and the military troops. Having said that, when you speak to the European diplomats, they also tell you we're not seeing an escalation and we're not seeing a degradation of the situation. So when you put all of this in context, that's good enough for the time being.
Yeah, and then we heard from Chuck Schumacher, well, not Chuck Schumer, rather, not Mr. Schumacher, talking about sanctions and whether they would actually deter President Putin. Thank you so much. Maria Tadeo there, our European correspondent in Brussels. Now, let's also have a look at what some of the companies, U.S.-based and pre-market, are doing. Peloton, of course, has been in the news quite significantly, gaining some 3%. You can see Lyft down 4%, and then Microsoft, a little upside after it's said to be buying a cybersecurity company, one of the biggest acquisitions they had, and they bought two smaller companies last year. On the back of that news, a person familiar with the story telling Bloomberg that they're on the acquisitive path, getting some 0.8%. Now, earnings season well underway with lots of big names reporting this morning, including Equinor, GSK, ABN AMRO, and Maersk. So we're back with Geraldine Sundstrom, portfolio manager for asset allocation strategies at PIMCO. Geraldine, when you look at some of the things that we have been, looking at in earnings, I know a lot of it, of course, what happens to the balance sheet, but where do you find the most value in corporates right now?
I think one thing we need to all bear in mind is that the best day of economic growth are behind us, and that growth is going to slow down during 2022. All the more than central bank seem to be pretty resolute on hiking interest rates. So it's really a time to think about which are these areas that are going to be much less sensitive to GDP growth that will have sustainable growth going ahead. So we think that quality growth, actually, and companies with good balance sheet and cash flow are likely to do better in 2022, which I think, is a little bit different. We're moving away from some of the more cyclical, more value name into areas where we feel there will be more sustainable growth ahead.
Geraldine, we had a great chart actually looking at VIX and JP Morgan Asset Management, for example, saying this is, without a doubt, their bellwether. If it goes under a certain, or actually over a certain, amount of volatility in the 50-day moving average, then it's a buy signal. Are there any signals in the markets that you're looking at, flashing red at the moment?
Well, we think that until rates settle down, which means we need the inflation picture to settle down, is going to be difficult to make a resolute call for the end of volatility. There could be, a bad CPI print tomorrow, or there could be a good one. And what about the next month? And what about our average hourly earnings? So we think that the first few months of the year are going to be complicated. That said, this type of volatility is an opportunity. We don't think it's a massive risk. We don't think central banks are going to make a policy mistake. And that creates entry point for those companies with good balance sheet and sustainable growth ahead.
What do you do with commodities? I don't know whether there's something commodities that you want to buy right now. If you look at the current list of commodities in backwardation, we have natural gas, aluminium, copper, steel, rapeseed oil, soybeans. And if you look at aluminium, it's actually surging to the highest since 2008.
We think that the situation is going to improve. So any type of shortage, bottleneck, or price pressure are likely to improve as the year proceeds. So it's likely that we have seen the best days of a number of commodities, except for the ones that are going to be supported secularly, like lithium, like copper, like wood. We're sort of trying to differentiate here and really think that what we are seeing right here, right now, is somehow a bit of the remnants of 2021, some remnants of the reopening massive liquidity amount. And this is a picture that we should put, in the back mirror and really look forward now.
Geraldine, overall, what do you do with some of the high yields? I know this has been one of the signals that the market is actually waiting for when looking at the more periphery bonds in Europe, but also treasuries.
Well, yes, we think it's a bit early still in that area, except for, being very selective and bottoms up, which our credit analysts are doing. I feel like the intermediate at the moment, and maybe the area where you can get high yield and it's more attracting, is emerging market foreign exchange. We have there extremely active central banks that have been ahead of the major ones, which is very rare. And even in some, higher quality emerging markets, you can have liquid carry.
All right, interesting. Geraldine, thank you so much for joining us. Geraldine Sundstrom, their portfolio manager for asset allocation strategies at PIMCO. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour, we also speak to the BlackRock Vice Chair, Philip Hildebrand. Up next, though, we speak to Sweden's Handelsbanken Chief Executive, Carina Ackerstorm. Send in your questions on IB plus TV Go. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Handelsbanken has warned that it expects to take a hit of $131 million related to a new tax in Sweden targeting large credit institutions. Well, to talk about that, earnings, and of course what they're expecting in the future is the Chief Executive, Carina Ackerstorm. Thank you so much, Ms. Ackerstorm, for joining us. There's a lot of questions on actually some of the dividends, and your share price is under a little bit of pressure in today's trading session. Partly it's because shareholders are disappointed about the dividend that you're putting in place. Why not be more generous with shareholders given your capital position?
Okay, good morning and thank you for having me here. Yes, I think that the dividend, I think it shows quite well the balance that we see in terms of our ambition concerning growth in all our home markets, and together with when we look outside in the market and the geopolitical situation that we're in, but definitely mostly because we do have high growth ambition in all our home markets. So I think that is what it shows.
I know you've also said that exiting operations in Denmark and Finland are on track. Can you give us a little bit more of a timeline or your expectations there?
Yes, exactly as I said. I can't say so much because we are just in the middle of that process, but it is definitely according to plan, and we have seen a very positive interest in both those home markets. So I can't say so much about it. We will definitely get back when we have more to say.
And I understand that you have to be closely guarded on it, but when you say on track, is it in terms of price or in terms of timeline?
In terms of time, in timeline.
Can you give me a sense of actually, some of the cost-cutting measures that you've put in place? I think you have a, $3 billion target. What will that impact?
Yes, we presented a plan in 2020, and we definitely follow that. We're definitely on track everywhere. So we have initiatives going on. We've had initiatives going on for 3 billion, and we have seen today 2 billion of them are not all in place. 1 million you can see in the results, and 1 billion will definitely come. And we continue to work with more initiatives when it comes to the Swedish operation, the central headquarters, and the process we have around extra. And we will see decreased costs in UK. So that is what we...
Yeah, and I want to ask you a little bit about the UK, but so once you've exited operation in Denmark and Finland, what kind of impact will that have on either shareholder buyback or distribution, or also the impact on your capital?
Yes, we will see. I mean, that is a decision that we will take when we have all in place. Again, I will say that. So when we look at the dividend moving forward, we will definitely get back on that when everything is in place. So that is, I'm sorry to say, but that is what I can say today.
And 100% understand, and of course we respect that. Give us a sense of what happens in the UK. So you become actually a lot more dependent and interlinked with the UK. How do you see the landscape for financial companies evolving in the UK given Brexit?
Yes, I mean, we do have a really good business in the UK, and we have spent quite some time to establish a UK bank. And with that said, that we do have a really good office. So when we meet customer today, we see that they are not that affected. I think that if you look at the UK economy, I think that gives us a lot of opportunities, both in the private business and the corporate business as well. So getting back to business again, I think that is, I'm really looking forward to that. So quite optimistic.
So I don't know whether you're optimistic also because there seems to be a global tightening monetary policy cycle getting underway globally. How much will that be of help to Handelsbanken?
Yes, I mean, in many terms, the business that we have, and in UK especially, and you can see that in all our homeworks for that matters, when we look into the kind of business we have with the private customer and with the financing for the corporate business, I think that gives us a good opportunity if we look what will happen in the environment around us.
Thank you so much for your time today. That was the Handelsbanken Chief Executive, Carina Ackerström. Now, up next, we speak with the BlackRock Vice Chair, Philip Hildebrand. You can send in your questions on IB Plus TV Go. I know it'll be a robust conversation, of course, on what central banks are doing. Last time he was on, Mr. Hildebrand thought that they were looking at a policy mistake. Is that still the case? This is Bloomberg.
SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Markets relief. Global stocks climb as sell-off in bonds abates on easing concern over monetary policy. Moscow undercuts Macron, saying no deal was reached with Vladimir Putin at a meeting Monday on Ukraine. We get the latest on that and stay with Bloomberg Surveillance Early Edition. Up next, we speak to the BlackRock Vice Chair, Philip Hildebrand. We'll have questions on what's a bond bear market? Are we in one? What does a dollar decoupling again from Treasury yields also tell us about the market mood overall? You can send in your questions on IB plus TV Go. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first thing is first, so let's check on the markets. And again, we saw a bit of support from the authorities over in China. That's given a nice little lift to Chinese stocks, and that's filtering through to Europe. Now, the million-dollar question is, of course, what happens with the bond sell-off? As that's cooling off a little bit, will it continue to be supportive for stocks? The stocks Europe 600 rising more than 1%, about 1.4% higher. Technology shares bouncing back. We also had a raft of generally positive earnings that reported that lift. Of course, that's lifting sentiments amongst, for example, some of the traders, but basic resources stocks underperforming. Iron ore on the way down. And then the one thing that I really like is actually the dollar gauge. One of the million-dollar questions, again, that we try to ask a lot of our guests is actually what happens when there's this decorrelation or decoupling between the dollar and Treasury yields. The other thing we need to look out for, which is a really difficult question, is what part of the bond market concerns our guests the most. Let's also look at some U.S. pre-market share action. Now, Peloton, so much speculation about Peloton. We found out yesterday that they would not get rid of their instructors, the famous instructors that apparently are paid some $500,000 a year to do some of the class on Peloton. That stock gaining some 3.3%, a bit of pressure on Lyft, and then Microsoft. We're hearing about a possible acquisition of a cybersecurity company. Now, to talk about inflation, bonds, and everything in between, which means the dollar, periphery bonds, we're joined by Philip Hildebrand. Now, before serving as vice chair of BlackRock since 2012, Philip was chairman of the governing board of the Swiss National Bank. He served as the director for the Bank of International Settlements, as well as being the Swiss governor of the IMF and vice chair of the Financial Stability Board. But much more than that, he understands the linkage between markets, central banks, and inflation. So, Philip, thank you so much for joining us. Now, last time you were on, you said, look, we're looking at a global tightening cycle, or at least the market is pricing in a global tightening cycle from central banks, and that is 100% a mistake because inflation is not a demand shock, it's coming from the supply side. You still hold that view?
Yes, absolutely. We're in a very different environment. It's a supply side driven inflation story. We have a restart, not a recovery. And we have new central banking monetary policy regimes that have led to A lot of questions around communication and around ultimate goals of central banks. So I think at every level we're in a kind of a new regime, and you can see this. The market is trying to find its way to what would eventually then happen throughout the whole cycle.
But Philip, so if we talk about a policy mismatch, is this because central banks are communicating things wrong, or is it because they're panicking because they're seeing 5-6% inflation, which frankly is still staying on much longer than we thought last year?
I think there is a little bit of a race going on. Markets are pricing in new expectations. Central banks don't want to be seen to be not responding to this very high inflation, which is linked to the restart, and so they're responding. The rhetoric ratchets up, the market responds. So there's a bit of a race going on, a feedback loop. And I think eventually, things will settle. People will start to see through it. But at the moment, I would expect this to continue for a while, and we're going to see volatility. At the end of the day, I think we're going to see a muted full cycle of interest rate rises.
Would that be genius? Because actually, so you have central banks that at the moment seem quite hawkish. They end up being dovish, and so it's almost like they don't do much, but mission accomplished.
Well, we should think about why the cycle will be more muted, in my view, and I think that has to do with the nature of the inflation here. Very few people really mention this is not an overheating economy. We're still growing below potential. So the idea here is these are inflation dynamics, very unpleasant, not acceptable in many ways, but they are driven by supply constraints, not by an overheating economy, and that will lead to a more muted cycle in the end. But until we get there, we're going to see a lot of volatility.
But I think a lot of economists are saying, look, I go to the supermarket and my tomatoes are whatever, €1.40 instead of €1. Even when the supply constraint eases, then that's not going to go back to 1.
I think that's right. I think we are going to see a higher inflation regime in a steady state than what we've seen in the last 20 years. And central banks will ultimately have to live with this higher inflation, because if they want to squeeze it all out and get back to what we had before in terms of the inflation rate, I think the cost to the real economy will be too great, because this is not driven by an overheating economy, but by supply constraints.
I also spoke to Jeff Curry of Goldman Sachs, and he was punchy. He said, look, I've never seen a market like this in my 30 years in the markets, and we're out of everything, right? You name it, and we're out of it. When do these supply concerns go back on track to something that's much more easy to live with?
I think the good news is I'm here today for the first time in almost 2 years. We're reopening. The quicker we can reopen the economies while paying attention to the health and safety concerns, I think the faster this will happen. My guess is we're not really going to see an easing on this before the third quarter, but I would be hopeful that if we can continue on the opening path, on the reopening path, that by the end of the year we're going to start to see some of these supply chains that will begin to adapt. Some of it will remain in place. Remember, we're going to have the transition to net zero. That's going to raise costs. That's going to create some of the same mismatches. We're going to have higher energy prices for a while. We're going to have a rebuilding of global supply chains generally to have them be more resilient. So some of these longer-term factors will persist, and that's why I think we're going to have to live with higher inflation going forward.
Philip, who's getting it wrong? So out of the Fed, there's a lot of concerns that actually they're also, behind the curve or behind in the hiking cycle, because if you nip it in the bud, then you can kind of normalize a little bit. But between the Bank of England, the ECB, and the Fed, where does the policy mistake come from?
Well, I'm not going to comment on this. I think the confusion right now is, are we normalizing policy, which is what they're really doing right now, and that's perfectly acceptable. I think we no longer need very expansionary monetary policy given where we are on this powerful restart. Or are we kind of embarked on a massive tightening cycle, hitting the brakes? That's a big difference. And I think right now the market pivots back and forth from normalizing to hitting the brakes, and that's where the confusion comes from. So I think the more they can do to say, look, what we're doing right now is we're normalizing. That makes perfect sense. Nobody can argue with that. The question will then be, where does the full cycle lead us? Interestingly, if you look at the U.S., the full cycle hasn't, in terms of what the market is pricing in, it hasn't really changed. So I think this notion of at the end of the day, a muted cycle is still very much in play.
But is there a part of the bond market that actually worries you? I don't know whether it's the pace at which Treasuries are moving that's a concern. If we had, if we touch 2% in the 10-year, what happens?
Well, that's part of the tightening, of course, will come through the bond market. I think right now it's unpleasant because the regime has shifted, people getting used to it. You know, not long ago, central bankers were telling us we're not going to raise rates at all. That's clearly off the table. The normalization has begun. So the market is trying to find its way. And as we've seen in the peripheral bonds in Europe, that can be pretty unpleasant. So I think we're going to have this bout of volatility, perhaps for a while. But at the end of the day, I continue to believe firmly that this cycle will be muted relative to a normal monetary policy cycle.
I know you're a gentleman and actually, you know, didn't want to say on who's getting it the most wrong among central banks, but is it up to the market's job to get that nuance, or do communications in general as central banks need to change?
What I find troubling is that in some cases you have very little reference to the underlying cause of the inflation, and I think that's dangerous, right? So when you look at a problem, in this case higher inflation, you first look at what causes the problem. And by not saying anything, you sort of imply this is just a normal 70s type of overheating inflation dynamic, and it isn't. And so I think that the ones where I worry in terms of communication is where there's absolutely no reference to what actually is causing this higher inflation. I think that's the part where I'd be careful, because that can lead to misinterpretation by the market, and then you can get into a dynamic that becomes self-fulfilling, which could be very problematic.
Philip, thanks so much. Philip Hildebrand, their Vice Chair of BlackRock, stays with us, and we'll talk a little bit, well, a lot more actually about this inflation debate and maybe how some of the conversations surrounding central banks need to change. Up next, we continue our conversation with the BlackRock Vice Chair, Philip Hildebrand. You can send in your questions as well on IB Plus TV Go. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Economists have planned for a long time the fact that the inflation we're in would be probably longer term. I remain very optimistic for 2022 for Amundi. Our portfolio manager have anticipated this situation. They are actually diversifying our portfolio to make sure we keep the savings of our clients safe. And these rotations are important, both in emerging debt, for instance, or in value equities.
Well, that was the Amundi chief executive, Valérie Baudson, earlier speaking to Bloomberg exclusively on beating analyst fourth quarter earnings estimates. Now we're back with Philip Hildebrand for a robust conversation on bonds and, of course, for a robust conversation on inflation. He is vice chair at BlackRock. Philip, you know, given the nuances that you were really hitting home on inflation, how central banks should look at it, how should investors position themselves on bonds? Should we chase, you know, lower duration or actually bet on convexity?
I think we continue to think that you want to be underweight bonds. This is a regime shift, and you have to remember we come from a kind of 30-year period of essentially bonds, you know, yields always, interest rates always going lower, a disinflationary, a very long disinflationary regime. I think that's over. So we have this very high, unusual, restart-driven, supply-driven inflation. But even once that sort of eases, we're going to be in a higher inflation regime. And so I think it's very important when you look at bonds to recognize this is a new regime. And the old regime has been around for a very long time. There are very few bond investors today active in the markets that remember anything, you know, different, the sort of previous regime. So that's why I think you want to be very careful here in this environment. And it's important to just recall higher inflation is going to be around for a while. We're going to have to learn to live with this. The cost of squeezing it back to what we had in the last 10, 20 years is going to be way too high, and central banks are going to recognize that. So the key is finding a way to live with higher inflation without leading to kind of an unanchoring of inflation expectations. That's really the art of what they're going to be faced with in the central bank.
So, I mean, and we also had a similar warning actually from the Goldman Sachs chief executive saying, look, we just don't have the muscle memory because this has been going on for so long, especially for the younger traders. I mean, I know we have, you know, younger traders, older traders, you know, chief executives of a certain vintage and not looking. I mean, what is your premise on what they should be looking out for? We're also seeing some decoupling, like funny moves, you know, decoupling of dollar, for example, at Treasuries. How should we read all of these signals?
I think that we're in between regimes. We're entering a new regime. The policy framework is not entirely clear. There's confusion as to, is it normalization, is it tightening? Central banks need to be very thoughtful as to how they communicate, put a clear frame out in terms of what they're doing, and recognize that, as you say, nobody has experienced this. You know, I was blessed to have known Paul Volcker as a mentor, but I wasn't in the markets when he raised interest rates at the time. So nobody has experienced this. None of us have seen a pandemic. We haven't really seen, very few of us were around I think at BlackRock, Larry Fink is the only bond trader who was around at the time in this previous regime before we had this long disinflationary kind of period. So we have to recognize that all through these trading floors, all through these firms, most people have never seen this. And that, of course, makes it all the more important for central banks to communicate clearly what they're trying to do and why they're doing it.
And there's no textbook, of course, because we've never seen anything like it.
No, we've never seen a restart. We've never seen a pandemic. We've never seen, almost never, inflation rates this high. We've never embarked on a net zero transition. So a lot of the things we're facing right now are entirely new. And so therefore we should not be surprised at volatility in the marketplace. Again, I think in the end, central banks will recognize this will be a muted cycle. Yeah. And they will begin to communicate accordingly, and then the market will settle down, and we'll have to live with some, you know, a period of higher inflation.
But there's the kind of volatility that's good, healthy volatility, and then there's the kind that actually makes traders hide under their desks. What are we going to see this year?
I think right now, if you're a trader, this is interesting again, right, after a very long time. I think the key here is that it doesn't spin out of control. And it can spin out of control in two ways. One is if the central banks kind of fire each other on to just get tougher and tougher and tougher, and eventually you throw out the baby with the bathwater. The other risk, of course, is that the market somehow starts to believe that inflation expectations have come unanchored, and we see kind of runaway inflation expectations, which would be a very bad outcome, because then the central bankers would have to hit the brakes very hard, and I think that's the thing that has to be avoided. The cost will be too high.
So, I don't know, are there indicators that we should look at? Are there, a lot of the economic forecasts have been wrong, certainly into 2022, on how inflation actually changes?
Well, one of the things you can look at is long-term inflation expectations. They actually, if you look at the U.S., they have remained reasonably stable. So there's no sign yet of kind of runaway inflation expectations at the moment, but it's a risk, but it's not really in the data. You can also look at what the market is pricing in as a full cycle. And interestingly, in the U.S., the full cycle hasn't really changed very much. We're still going to be, at the moment, the market is anticipating a full cycle of interest rate hikes that will be about half of what you would normally expect in a cycle. So those are things that you can look at in terms of seeing through the short-term volatility, look at longer-term indicators.
And then, of course, the market is largely ignoring geopolitics, right? Everything, a possible Ukrainian invasion, which I don't know whether it's a good or a bad thing. Should we start pricing in something, again, as just a buffer in case something goes wrong for the markets?
My experience over the years is it's very hard for markets to price in geopolitical risk until it happens. And I see this internally. We're spending a lot of time. We're lucky to have experts on this to give us daily updates. But if you're running a portfolio, it's very hard to price in something on the basis of a likelihood that you just don't know what it is. And so I think the market continues to be focused on it, intensely focused on it, but probably won't price anything in a significant way until it happens, or for that matter, doesn't happen.
So we have a great question, actually. We have quite a lot of viewer questions, but this is a good one. As a great student of inflation, I think you'll enjoy this. So this person, thank you for writing in. We love hearing from our viewers, is writing in saying, why is there no discussion on the role of Fed FAIT, the flexible average inflation targeting adoption, and what the role of that was in creating the new CPI regime?
Well, I think it's a good question. As I alluded to earlier, the fact that central banks have adopted new policy frameworks, and the Fed was, of course, the first one, and the ECB came with a slightly more moderate new framework, I think has something to do with, it's one of the reasons why I believe inflation will settle at a higher level. And, once you have a new framework, you can't kind of put it back in the bag that quickly. And so I think the listener is right. This is part of what has led to higher inflation expectations. And there are other reasons, as I mentioned, the transition to net zero, the rebuilding of global supply chains. These are all factors that have played in. But I do believe that the new frameworks have had something to do with raising inflation expectations.
Philip, thank you so much. We have to get you back on and just answer viewer questions for like 3 hours. Philip Hildebrand, the Vice Chair of BlackRock, in the studio. That was good. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine, and thank you. Toyota has stuck to its conservative profit forecast for the current fiscal year as it faces persistent COVID and chip-related disruptions. That is despite the world's top-selling car maker reporting an operating profit for the last 3 months of 2020 that easily beat analysts' estimates. Now, GlaxoSmithKline does expect profit to rise this year as it prepares to spin off its consumer health business, its biggest shake-up in more than 2 decades. The UK drug maker says earnings are expected to rise 12 to 14% in 2022 on an adjusted basis. And we'll be speaking to the chief executive of GlaxoSmithKline, Emma Walmsley. That's later today. Don't miss that interview at 12:30 p.m. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Coming up, today's big take, the first Super Bowl of the online betting era is upon us, and it's going to be wild. More on the NFL, online betting, and Byron Allen's bid for team ownership. That's all up next, and this is Bloomberg.
this chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now for today's Bloomberg Big Take, all about how the first Super Bowl of the online betting era is upon us. Well, online sports betting is being legalized in more and more U.S. states, and 100 million Americans can now legally bet on the Super Bowl. Commentators say sports will just never be the same. Well, joining us now to discuss all of this is our resident NFL lover, Bloomberg Quick Takes, Alex Webb. Alex, thank you so much for joining us. So first of all, how valuable is online sports betting for the NFL?
The NFL expects that it could be making $1 billion a year within 10 years. The sports betting market as a whole is worth something like $1.5 trillion. So even if the NFL is getting $1 billion, the pool in the US is likely to get a lot bigger.
So what are the societal risks, I guess, attached to it, and what happened in other countries, Alex?
Well, you do see that of the number of people betting, they estimate that about 5% of those bettors are problem gamblers. And so if the number of people betting increases, inevitably the number of problem gamblers also increases. So if there are 100 million people able to bet in the US now, that could mean that maybe there are 5 or 6 million people who are problem gamblers. Now, that's clearly a big number. We've seen similar effects in, say, the UK, which had a massive liberalization of sports gambling advertising about 15 years ago. We saw the number of betting firms on soccer jerseys significantly increase, and the problem gambling also increased.
I know, and then Alex, big news, Byron Allen making a bid for the Denver Broncos.
Yes, it's a really interesting move. He would be the first African-American owner of an NFL franchise, coming, a few years after the huge scandal surrounding Colin Kaepernick. One wonders whether having better representation in the ownership corridors might have changed the reaction to the Kaepernick affair. So if this deal happens, he's still putting together a bid, it would seem like a really exciting movement.
Alex, thanks so much. Alex Webb there from Bloomberg Quick Take joining us on the NFL. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kay Lyons in New York, or Anna Edwards here in London. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
But come the second quarter, we're going to start to see just a pretty sizable growth scare.
We're going to have a very volatile but trendless market.
It's going to be a challenge, and investors should expect volatility as we navigate towards that.
I'm not just saying it's about defense. We can play a little bit of offense here, too.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Wednesday, February 9th. Our top stories today. Lyft hits a speed bump. It reports fewer than expected riders in the fourth quarter and says the fallout from Omicron will be felt this year too. After the bell, we'll get earnings from Uber and from Disney. Stretching an already worn thin supply chain. Automakers may soon feel the impact of that protest that's blocked traffic between Canada and Detroit. And it's the first Super Bowl of the online betting era. More than 100 million Americans now live in places where they can legally bet on Sunday's big game. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London. Matt Miller and Kaylee Lines are in New York. Kaylee, good morning. I'll maybe leave the Super Bowl chat to you, Kaylee. But in terms of the markets, we've got a real positive session on our hands here in Europe. It seems the earnings story offsetting concern around higher rates for now.
Yeah, it was a positive session in Asia as well. You know, I could talk about football all day long, but we also do have to talk about the markets because this is, after all, Bloomberg Television. That session in Asia, really across the board, we saw gains when it came to the major benchmarks. The MSCI Asia Pacific Index as a whole was up about 1.5%. A few outlier moves I wanted to point to, one being China, the CSI 300 up nearly 1%. Sentiment may be shored up by those state funds coming in to buy in order to stop some of the selling we have seen in equities. You also saw Hong Kong outperforming, and that was really a move led by technology. The Hang Seng Tech Index up more than 3.5%, and Alibaba was a big part of that. That stock up about 7%, gaining back what it lost yesterday after it made that filing with the SEC to register more shares when it came to those US ADRs. There was a lot of concern about maybe that meant SoftBank was going to start to sell some of its stakes. SoftBank out, though, overnight saying that it had nothing to do with it, so that maybe allays some of those concerns. Finally, I wanted to point to what's happening in Japan. The 10-year JGB yield is sitting right around 21 basis points. That is just off the highest going all the way back to January 2016. So we're talking 6 years, but the BOJ has decided not to alter its bond buying program. It seems that 25 basis points really is more the line in the sand, so that is something to watch from the overnight session, Matt.
Kaylee, we have seen some decent gains. You know, yesterday on the S&P we were up. Today on futures we're up. Everything seems pretty chill, which is surprising considering the interest rate situation. We do see yields, though, coming back down. Right now, 190, 180. When Tom Keene talks, I listen. The surveillance co-creator sits behind me, came in this morning, logged onto his terminal. He said, wow, the VIX is below 21. And I think that's really what we want to watch today. Everything seems pretty unvolatile today, and that's why we see stocks rising and rates coming back down. Bitcoin, on the other hand, is off right now, $43,428. We have a couple of conflicting forecasts. JP Morgan says the fair value is actually more like $38,000. On the other hand, if you look at the charts, the technical analysts will tell you that after 6 days of gains, we're prepared for a breakout. Maybe today's drop changes that. Anna?
Yeah, absolutely. Matt, a lack of volatility and consistent moves to the upside across European equity markets. The map looking almost uniformly green this morning here for European stocks. Some of the things that have sold off most in the last couple of days on concerns around higher rates, gaining the most today. So we see the Italian market, for example, up by 1.9% today. So most sectors are in positive territory. I'll show you a couple of sector movers, though, that tell a bit of a story as to where we are at this point. Autos bouncing nicely today, up by 3.3%. Still a lot of concern about the supply chain issues within that sector and much more broadly. I know that is a topic we will return to later on in the program, but just to show that not everything is on the rise today, as we see those yields come down, see those rate expectations come down just a little bit, how long that lasts we'll see. But as that is the dynamic of this morning's session here in Europe, we are seeing then some banks being sold off as a result, so the banking sector down by 0.1%. Amundi, a money manager here in Europe, the biggest money manager here in Europe, up by 4.4% today on their numbers. Inflows 4 times higher than had been expected for this particular business. A big part of the conversation over at Amundi is around passive funds. A.P. Moller-Maersk, a logistics giant, of course, now the world number 2, not the number 1, but still a big focus for us. 1.8% to the upside. It actually sold off in earlier trade because some of the guidance that they gave for the market, which was for the first time a glimpse of what they expect for 2022, could have been interpreted as a little bit conservative. They were talking about normalization of their markets in the second half, which might not be good for a business like Moller-Maersk, which has been riding high, of course, on the back of those high shipping rates, Kaylee.
Yeah, and we are going to have more on shipping and logistics supply chain challenges throughout this hour. And as for what we're looking at throughout this day, this Wednesday, Federal Reserve Bank of Cleveland President Loretta Mester will be speaking at the European Economics and Financial Center event at 12 p.m. New York time. We'll also have EU foreign and health ministers meeting in Lyon, France for an aim of developing the bloc's health policy. And after the bell today, more earnings are coming. You have Disney at 4 p.m. New York time and then Uber after the bell, Matt.
All right, we'll be watching those closely. Let's dive deeper right now into earnings. Bloomberg's Laura Wright out of London. Laura, what did we learn from Lyft yesterday?
Well, I heard you guys talking earlier, Matt, saying Lyft has hit a speed bump. Dan Ives, well-known tech analyst at Wedbush and friend of this show, he thinks Omicron and COVID cases are in the rearview mirror for Lyft. And in fact, we saw record average revenue per active rider topping $51. They were able to do this because pricing has been increased and also that driver shortage that analysts were pretty nervous about going into these results was less pronounced. In fact, Lyft, they're increasing drivers 34% year over year. Now, Uber is a different picture. It operates globally. And yes, there is the delivery business. The expectation from the street for Uber is that gross bookings will increase 50% year over year. Yes, comps were low. We can see Uber trading to the downside in pre-market this morning, but there is a notable headwind. The delivery space is far more competitive now. Companies like DoorDash in the States, basically, we are all too lazy or too busy to cook anymore.
I myself am not a cook, so I am definitely on that team. Let's look ahead. Besides Uber, what we're getting after the bell today is Disney as well. Are we expecting the same kind of headwinds for Disney Plus as we saw from Netflix a few weeks back?
You're right, Katie. Netflix really did spook the market at the beginning of the month, and investor tolerance is low if we see misses on additional subscribers. Wells Fargo, they're forecasting 7 million additions this quarter, but bring this into the context. Disney Plus was only launched at the end of 2019, and the expectation on the street is that we're going to see 125 million subscribers by the end of today in total, so really phenomenal growth there. But Wells Fargo have a key line. They talk about large scale and also soul searching for the industry. The cadence of content, it's really expensive, and we're getting bored of new content faster. It's the Tinder swindler today. What will Disney bring up tomorrow?
Thanks, Laura. Laura writes with not at all boring content. Bloomberg's Laura Wright with the latest on the earnings stories to watch. Now, back to the logistics drama. In Canada, protests over vaccine mandates and COVID-19 restrictions have expanded across the country, threatening to spill over into the United States and sending a warning across the globe. Meanwhile, on the COVID front, in Hong Kong, they have reported record new cases, with many being linked to family gatherings during the Lunar New Year. Bernard Chan, a top advisor to Hong Kong leader Carrie Lam, spoke with Bloomberg earlier.
I don't think we can ever go into a full lockdown. We just can't do it in Hong Kong. We cannot have the same sort of lockdown you see in the mainland. That's just not possible in Hong Kong. But we would try to contain it.
Sam Fazeli, Bloomberg Intelligence Senior Pharmaceuticals Analyst, joins us now. It's interesting, your perspective of what a full lockdown is very much depends on where you first experienced it, perhaps, Sam. And what we're seeing in Hong Kong by European standards looks pretty intense, looks pretty locked down. Such are the limits on people's movement and ability to gather. What do you make of the way that China and Hong Kong is still trying to, okay, not COVID zero, but still very much focusing on keeping these case numbers down?
Yeah, hi, Anna. I think it's going to continue to be very difficult, especially with Omicron being the variant that's there. And if it's BA2, BA.2 subvariant, it's even worse because it spreads at about 15, 20, 30% better than the first Omicron, original, I wanted to call it. It's only 3 months old. So it's going to be very difficult to keep this closed and lock down and stop it from transmitting unless they do a full people at home can't come out China style lockdown.
Do the rest of us, here we feel like the pandemic is coming to an end, need to continue wearing masks, Sam? Are we just virtue signaling? Does it really help anything?
Yeah, so look, I mean, it's not a difficult thing to do. I still wear one definitely when I go into crowded spaces, when I go into an airplane, when I'm at the airport, when everybody's crammed together before you get on the plane. But obviously when you go into a restaurant or places like that, you can't really continue to keep wearing it. So I'm doing that. I'm fully expecting that I'll end up catching Omicron. It's impossible, I think, in my view, to avoid it unless you stay at home all the time.
All right, Bloomberg Intelligence's Sam Fazeli. I think a lot of us feel that way. Thank you so much for joining us. Now over to Washington. The House passed a 3-week government funding bill, sending the measure to the Senate ahead of a February 18th government shutdown deadline. Meanwhile, though, Congress is making less progress on foreign relations as lawmakers struggle to agree on a Russian sanctions bill over the Ukraine crisis. Anne-Marie Horder, Bloomberg Washington correspondent, joins us now from our D.C. bureau. So, Anne-Marie, Congress not really making any steps forward. Are we making steps forward on the diplomacy front?
Well, when it comes to the sanctions package, they'll tell you time is of the essence, but obviously some of that urgency is starting to fade. Similar on the diplomacy front, there were a number on a multifaceted front around the world of meetings between Emmanuel Macron and President Vladimir Putin, and then he went over to Kiev. And then he really swapped notes with Olaf Scholz, the Chancellor of Germany, together in Berlin, as well as with the leadership of Poland. So you could see there are a number of diplomatic meetings taking place. When it comes to the U.S. side, they obviously met with the Chancellor, Olaf Scholz, and Nord Stream 2 was really the topic of conversation here in Washington, D.C. And in Congress, that is also the centerpiece in terms of these negotiations and how they are struggling to reach an agreement on the sanctions package.
What do we know, Anne-Marie, about the state of Build Back Better, I guess 2.0?
Well, Senator Joe Manchin will tell you time and time again it's dead, but the president is obviously trying to get pieces of that agenda through. And today he's going to be talking about the climate provisions in that. More than $300 billion of that legislation would go to things like solar and wind energy, things you need massive utility companies to help foster. So he's having some of these CEOs from these companies join him at the White House. It's similar to what he did with executives last month from Microsoft, GM, and Ford. He's really looking out to corporate America to try to help boost some of these plans to get at least chunks of what he calls it and pieces of his Build Back Better across the finish line before the midterms.
All right, that clock is ticking down toward those midterm elections in November. Thank you so much to Bloomberg's Anne-Marie Horder. Now let's get back to the markets. Take a look at some stocks moving in pre-market trading here in the U.S. A big mover to the downside is New Relic. This is an application software company reported after the bell, forecasting a much wider loss than anticipated. And as a result, that stock is down a whopping 23% in early hours. For another application software company, though, it's a better story. Paycom actually topping expectations in its report. It is up about 8% at this point. And another stock moving to the upside for potentially a third day is Peloton. It is up about 4% in early hours on this Wednesday after a record 25% gain on Tuesday and a 21% gain on Monday. Of course, the CEO, John Foley, stepping down, really stoking this optimism that potentially a sale will indeed be something that happens. So that stock is moving to the upside, now trading just under $39 a share, Anna.
Keeping track, Kaylee, of the Peloton news flow feels like a full workout these days. Right, let's tell you what's coming up on this program. Ben Ritchie, Aberdeen's head of European equities, will join us. What does he make of the resilience we're seeing of European stocks and the strength of the European earnings season? And not to mention the global one. We will certainly get into that conversation. Plus, border blockage. How protests on the US-Canada border are stretching an already fragile auto and beyond supply chain. Plus, the NFL's big gamble. How legalized sports betting has changed the game. More on that and a few international learnings on the subject. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is totally the decision of the management of each company after carefully taking all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Earnings season continues.
Not since the 1980s have we seen these sorts of reversals.
Bloomberg is fastest with the numbers and analysis.
The fundamental story is really solid.
It's really kind of a balancing act.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on Bloomberg Radio and Bloomberg Television. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards with us out of London. We have been paying a lot of attention to the jump in yields lately. And the question in a lot of investors' minds is, what does this mean for the U.S. dollar? Does higher yield attract investors to the dollar, or do dollar investments really act as safe haven investments? And that's why we've seen such a big rise in the Bloomberg Dollar Index. This chart, for those of you listening on radio, shows that leveraged funds have reached the most bullish level on the U.S. dollar since 2019, after a very bearish stance throughout the middle of the pandemic. Joining us now is Bloomberg's Kriti Gupta to discuss. And Kriti, does this mean maybe we're at the top here?
It very well might be. One of the big questions here is simply going to be, what purpose does the dollar serve, right? You hit it. Does the dollar serve as more of a safe haven, or does it serve as more of a bet on increased rate policy? I think in the kind of lead up to what you've seen in the Bloomberg Dollar Index and arguably equities as well, you have seen some of that hawkish kind of pivot from the Fed get priced in, especially as we consider 50 basis points on the curve. But on the other hand of it, to Matt's point, you do start to see the yield curve flatten a little bit, which once again brings up the fact that if the Fed is going to be this hawkish and this aggressive in their tightening policy, they're essentially slamming the brakes on the economy, and that's not good news for the dollar.
Well, you mentioned it all being priced in. Is it all priced in? Have we reached peak hawkishness, not just in the dollar, but in terms of what we're seeing in the Treasury market, for example?
I don't think we've reached peak hawkishness, and once again, it really comes down to that 50 basis point hike, right? We know there's going to be several rate hikes. We know there's calls for as many as 7 or 8 this year. It's kind of a crazy what the bond market is pricing in, but I don't think we've reached peak hawkishness, because it's not just the amount of rate hikes, it's the margin of the move, right? So the 50 basis points is going to be kind of your make or break trade, not just for the bond market, but for the dollar as well, because right now it's kind of a coin toss of whether it's going to be a 25 basis point hike or a 50 basis point hike.
Kriti, good morning. We're focused on these geographies distinctly, but we're also focused on the relative stories between them, aren't we? And certainly the relative interest rates narrative might be affected by that. And we've seen this pivot from the ECB recently to a more hawkish stance, certainly less dovish. A little bit of pushback, though, coming from ECB officials just in the last 24 hours. Bank of France, Villeroy, saying the market reaction to the ECB may have been too strong. Is that going to be in any way effective, or is that, that ship has sailed now? We've turned that corner and there's no going back.
Yeah, well, there was actually a really big spotlight on the cable rate just a few weeks ago. But now it seems like the spotlight has absolutely shifted to kind of euro dollars instead. Really, the point being that if the ECB, I should say, turns even more hawkish than the market is pricing, does that create just more kind of carry for the euro relative to what you're seeing right now priced into the market? The other piece of the equation is simply the outperformance of the rest of the world relative to the United States, because that isn't something that had really been proven true. That was the call, I should say, just about a year ago at the start of 2021, and it's a trade that didn't really come through fruition as we hit the end of 2021. But I think you're starting to see some of those funds actually target companies, target currencies, target even commodities outside of the United States. So I think, Anna, to your point, it absolutely is a relative trade, and a lot of the spotlight, once again, comes down to what's happening in Europe.
Getting back to the U.S. equities picture, we see some real calm coming into these markets. We were up yesterday. We're up in futures today. The VIX is down below 21. Is this about earnings? Is earnings season going all right?
I think it's more of a sigh of relief. Earnings are going okay, right? But I think it's a sigh of relief after really just the carnage that you saw in the first couple of weeks of the year. The idea that maybe we can take a little bit of a breather, reassess just a little bit, because a lot of portfolios, especially on a valuation basis, well, they're not as invested in the stock market as they were, say, January 1st, 2022, right? So I think one of the big questions now is they're looking at it more on a micro basis, which brings to your point, earnings. But one of the big issues here is that the bar is set extremely high, because last earnings season, margins were the big picture, right? Everyone was beating on margins. Consumers were able to digest the price increases, I should say. And this time around, you actually have to beat on margins even further for the stock to actually get rewarded by investors. And that's coming at the same time as you see kind of a drawdown in that fiscal stimulus and consumer purchasing power.
Kriti, thanks very much. Bloomberg Markets correspondent Kriti Gupta with some of the latest themes we are following. If you want to get market analysis and check out the Market Live blog, MLIV Go, that is the function to use on your terminal. This is Bloomberg.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now let's get the first word news. And a New York judge has granted bail for 2 people charged with trying to launder billions of dollars worth of Bitcoin. The cryptocurrency was stolen in a 2016 hack of the Bitfinex currency exchange. Ela Lichtenstein and Heather Morgan were arrested yesterday. The government says it seized about $3.6 billion of cryptocurrency from the couple. BMW's choice to sell electric vehicles to the tens of millions watching Sunday's Super Bowl, that would be 1980s action film hero Arnold Schwarzenegger. In a commercial for the BMW's new plug-in, he says he plays a grumpy Zeus who is retired to Palm Springs with his wife Hera, played by Salma Hayek. Schwarzenegger tells Bloomberg Green, quote, "I would push alternative fuel vehicles from here to eternity." And media mogul Byron Allen is preparing an offer that would make him the first black majority owner of a National Football League team. Allen says he'll be making a bid for the Denver Broncos. Bloomberg's learned that the investor group led by Allen could pay as much as $4 billion for the team. And Anna, of course, I am personally invested in this story as a Denver Broncos fan, but really this could be a big deal for the NFL that has been plagued by a string of racially oriented issues, from Colin Kaepernick kneeling during the national anthem in 2016 to recently allegations from Brian Flores, the former coach of the Miami Dolphins, about racial discrimination in the NFL, because the players predominantly in the league are black, and it is not represented at the coaching level or at the management level or at the ownership level to this point.
Right, and this story could change that. Yeah, an interesting new story for the NFL to tell then if this comes to pass. We'll get back to the markets shortly. Ben Ritchie, Aberdeen head of European equities, joins us. Strength in Europe today. We'll talk about that next. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
From New York City.
We're here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Here is what you need to know. Shares of Lyft are lower. The company reported fewer riders than expected in the 4th quarter as Omicron hurt travel. But the riders that did take Lyft generated higher revenue due to higher fares. Meanwhile, the company has been dealing with a persistent shortage of drivers. After the bell, we will get earnings from rival Uber and Disney. Protesters blocking traffic between Canada and Detroit are further stretching an auto supply chain that's already worn thin. Automakers indicate there's been little impact so far, but the situation could get worse within days. The demonstrators are showing their opposition to vaccine rules. And it is the first Super Bowl of the online betting era. More than 100 million Americans now live in places they bet on Sunday's big game. After decades of opposing gambling, the National Football League is now all in. The NFL says it's taken strong measures to prevent any corruption. More on that story shortly. That is a look at what you need to know this morning. Matt, what are you looking at ahead of the market open?
I'm looking at markets that are relatively calm this morning, Anna. We have gains on S&P futures right now after we rose in the cash trade yesterday, and the VIX is holding down around 20. So after that big bond market jump that we saw in yields, things are coming back to normal to some extent. You can see the 10-year yield right now at 192.34. Yesterday at one point we were at 197. So we were really getting up close to that 2% level, and it looks like we're going the other way. Bitcoin right now down 1.25% after 6 days of gains. Today would be a 7th, 43,676. As I've said, there's a couple of opposing views in the market. Obviously, that's always the case. But we hear JP Morgan saying fair value should be $38,000, although they do say long-term $150. The charts tell us we may be ready for a breakout, and obviously Bitcoin is a very technical asset. Kaylee, what are you seeing in terms of pre-market movers?
Well, it really all comes down to earnings when we look at the movers before the bell this morning. Of course, you had Lyft reporting after the bell yesterday. Its riders actually missed expectations, the Omicron variant having a big impact on people's desire to use ride sharing. If there is some positive news, though, they are making more with the riders that they do have. That revenue metric is increasing, so that is a bright side to the equation. But nonetheless, the shares are moving lower in early hours, down the better part of 4% when it comes to Lyft, and also dragging a bit on Uber, which is down about 0.25%. It, of course, will be reporting after the bell today, so we'll see what the read-through is. But, of course, Uber has the extra insulation of the Uber Eats business, that food delivery business. It's not just about ride sharing for that company in particular. A much more positive story, though, when it comes to Enphase Energy. This is a solar player reported after the bell yesterday. Its revenue forecast handily exceeding expectations. As a result, that stock is up about 18% in early hours, Anna, and it's taking a lot of other solar-related stocks up with it as well.
Yeah, that's an interesting development, one to watch there, Kaylee. Let me tell you what's going on here in Europe. Just as Matt was saying, a fairly buoyant picture for European equities in general, and just one of those sectors that has been much beaten up of late and now moves to the upside. The auto sector up by 3.2% or so. And in general today, we're seeing some of those areas, some of those geographies that have sold off in recent days as we've been concerned about sovereign spreads or higher interest rates more broadly, such as the Italian market. That's where we're seeing some of the bigger bounce coming today. Not all sectors like this pullback in rates, if that's the right phrase for it. We've seen, of course, higher rates and now rates giving us a pause. And that doesn't go down too well with the banking sector because banking stocks have done quite well out of those higher rates conversations that we've been having in recent days. So the banking sector down 0.1%. Amundi, the biggest money manager here in Europe, that stock up by 4.7%. Inflows really outperforming 4 times what had been expected by analysts. So that's the story there. AP Moller Maersk on the logistics side up by 1.7%. Just how conservative was the guidance from this business? They talk about normalization in the second half of the year. So an interesting one to watch, of course, as share buybacks, return of cash to shareholder, balance sheet efficiency, all part of the conversation when it comes to logistics. Kaylee.
And we'll be talking more about logistics shortly. But first, Anna, we have to talk more about these markets. This is a question we raised with Kriti Gupta a bit earlier in the hour. How much hawkishness from central banks is already priced in? Can the moves we have seen go even further, or have we seen the worst of it in terms of the equity volatility and the global bond sell-off? Joining us now is Ben Ritchie, head of European equities at Aberdeen. Ben, do you think the worst is over? Are we comfortable with more hawkish central banks now?
Well, I think we're certainly seeing a level of a rotation within markets that we're unlikely to see repeat. I mean, I think when you look at in January, I think you saw the 3rd biggest annual rotation of value against growth in just 1 month. So it was a phenomenal strength of rotation. I don't think we're going to see that repeat itself. But again, I think it's likely as we're operating in an environment of monetary tightening that we're going to continue to see volatile markets ahead of us, I would have thought.
Ben, good morning. Does your stance on equities, does it very much depend on the speed of the move that we see in Treasuries and other interest rate dynamics globally? Is that going to be what's in the driving seats?
Absolutely. I think it's all about those expectations. And we saw a big adjustment during January. And then now I think markets are waiting to see what's next. And I guess there are counter-posing views, aren't there? Yes, there's a more hawkish environment for central banks. But on the other hand, perhaps the growth data might also be looking to weaken. Perhaps central bankers may have thought they've talked things up too much. So we'll have to see how those two things are playing against each other. But I don't think we're going to see quite the sharpness again during 2022 that we saw in January.
Ben, are you surprised by just how long some of the supply chain issues are lingering and hanging around? We're going to talk about this a little more in the next part of the program. But I just wanted to get your perspective because it's still a feature of this earnings season. And maybe some people thought it would have gone away by now. And we're still talking to executives who are saying, look, it's going to normalize in the second half. And that seems to be a sort of default answer.
I think second half normally means we don't know when, but
yes,
we hope it'll happen at some point. And I think that's kind of where we are. I mean, we were talking about this at the end of 2020, and we're still talking about it now. And I guess it's that thing where you've had that sharp demand rebound, particularly in goods, but maybe we'll also see that coming through in services against already stretched supply lines that are suffering from disruption. That's just been very difficult to fix. Hopefully we will start to see some of that ameliorate. You would have thought so, but you're also trying to catch up with where you were. So it's not just getting back to where we were, it's also having to put in additional capacity as well.
For the last few sessions, Ben, we've all been kind of freaking out a little bit about rising rates and the widening spreads that we're seeing in Europe. Does that bother you think equities at all? It doesn't seem to have had much of an effect.
Well, I think it's an incredibly interesting dynamic, Matt, because at the moment you've got this sort of rise in interest rates, in longer-term bond yields, in short-term yield expectations as well, which is positive for certain sectors. We talked about banks earlier, energy, you've seen commodities moving up, but equally, the implications of that and what that might mean for the real economy as we move through this year are not perhaps that positive. So you've got this real balance of companies that are benefiting from some of these nearer term trends, but then also trying to keep an eye on what might happen as we move through the year, and perhaps the environment may be getting more difficult. So I think it's quite a tough environment for investors to balance both what might be driving near-term earnings, but what might also be bringing some risk down the line. And I think that's a tricky combination to look at right now.
Does it hurt more small and mid-cap companies when you see rates rise? They have more difficulty maybe rolling over debt?
Well, I think generally speaking, valuations there are probably less demanding, and as a result, maybe there's a little bit less pressure from a sort of valuation perspective with rates rising for smaller companies. But if we do move into a period of more risk-off environment, then generally speaking, you do tend to see smaller companies underperform in that environment. We haven't quite sort of got into that picture yet, Matt, but that would be, I think, a scenario where we need to move into an environment where people were more cautious on the overall macro outlook.
Ben, thanks very much. Thanks for your time. Thanks for coming in. Ben Ritchie, head of European equities at Aberdeen, with his thoughts on the outlook for equities ahead. Coming up on this program, then, I mentioned that we're going to talk about supply chain. Kaylee's been talking about this morning as well. Blockage at the border, how protests in Canada are stretching an already fragile auto supply chain. And we'll talk global shipping rates and the global conversation as well. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Let's talk logistics. Maersk is buying Pilot Freight Services for $1.68 billion. The shipping giant is growing on land in pursuit of higher margins. We spoke to the CEO, Søren Skou, earlier today.
We have built in the last few years quite an attractive and profitable growth engine in landside logistics, basically selling logistics products to our ocean clients, and we're building out the capabilities there, particularly when it comes to fulfillment, where a lot of our clients, almost all of our clients that sell to consumers today, require both a logistics chain that can help them keep their brick and mortar stores stocked, but also an omni-channel strategy that can help them serve the consumer directly. And we're putting together our logistics offering so we can do both for our customers. Pilot Freight Services gives us further capabilities in that space, and that's why we're acquiring the company. the way we will pay for it, if you will, is to supercharge the growth of the company by selling the services to 10,000s of Maersk customers.
How is inflation in terms of wages and the tight labor market, how is that affecting your cost as a company?
Inflation is certainly also reflecting or impacting our business, and it will certainly do so in 2022. For once, I mean, we are impacted by the oil price. Clearly, we spent last year around $5 billion on fuel. So when the fuel goes up, it's a big ticket item. Our cost for port handling is clearly going up. The same goes for labor in warehouses and labor, in ports, trucking, and so on. So on a wide basis, we are seeing cost go up, and it will be with us for a while. Particularly the cost that is associated with ship leasing, where we have had to pay much higher prices for container ships that we lease, and that will stay with us for quite a while.
That was the CEO of the shipping giant Maersk speaking to us earlier today. And Matt, really interesting conversation there. The share price actually wobbled at the start of trade, now up a couple of percent, as the market was not sure what to make of the guidance, which maybe seemed a little bit conservative. But when you speak to the company, they're saying they need to assume normalization of things in the second half of the year. But that doesn't involve the prices they'll be able to command, because they've signed these long-term contracts, which mean that some of the higher prices we've seen recently, they keep benefiting from. You know, this is a sector that's done so well out of the disruption.
Well, and it's always better to underpromise and overdeliver, isn't it? The shipping margins have been fantastic for Soren Sko, and the shipping issues have been a real problem for producers. If we look at what's going on in Canada, for example, around Ottawa, where protesters over vaccine mandates and COVID-19 restrictions are spreading, it is horrendous for car makers. Truck blockades have halted commercial traffic at the critical crossing from Alberta into Detroit. Let's get more with Theo Argyris, Bloomberg's Ottawa bureau chief. So Theo, I don't know much about this bridge, but what I do know is that a lot of the U.S. car makers rely on Canadian production for everything from small parts to entire vehicles, and this can really cause problems for the supply chain.
That's right, Matt. Essentially, this bridge connects Detroit with Canada, and there is the auto sector has a number of facilities in Canada, and there's a lot of trade going on between the auto sector in Detroit with the auto sector in Canada over this bridge. About $100 million per day of auto parts and automobiles cross over this bridge every single day. So it's a critical bit of infrastructure for the auto sector and for trade between the two countries in general. About $150 billion worth of commercial goods gets transported over this bridge every year. And it's just this escalation of these trucker protests that we've seen in Ottawa now for almost 2 weeks, and we've also seen a border crossing between in Alberta, which is Western Canada, that is also being blockaded by truckers who are protesting vaccine mandates that essentially force them to get vaccinated if they want to drive trucks over the Canada-U.S. border.
Yeah, and so good morning, Theo. Is there any sense that any of this is improving at all, or at the margin of things worsening?
Well, I was just looking, just before getting on here, I was looking at the Canadian Border Services Agency website, which essentially gives you wait times for bridge crossings. The Ambassador Bridge, that critical bridge we were just talking about, is still closed for commercial traffic. And the commercial traffic, the trucks are being redirected about 65 miles north of Detroit. There's another bridge there that is passable, but there is a 4-hour delay to get over that bridge right now. So apparently, as of 5 o'clock this morning, there are still major disruptions between on border crossings between Canada and the U.S. right now.
Okay, so let's talk about the political pressure this puts on Justin Trudeau. I saw a member of his own party yesterday publicly criticizing him for this harsh stance on vaccine mandates. What are the implications? Could we see a reversal from the Prime Minister?
I mean, it's very difficult to see a graceful exit from this because Trudeau has taken a very hard stance on vaccine mandates. Essentially, he ran an election on obligatory vaccines in September, which he won. And so, I mean, his position has been very hard, and so are the truckers. They are demanding essentially the elimination of these of all of the vaccine mandates, including mandates from regional and local authorities as well. So, given that Trudeau ran an election on this, it's very hard to see how we actually get a resolution here. But you're right. I mean, you are starting to see a little bit of criticism from within his own party that maybe his position on vaccines now is counterproductive, right. and maybe there should be some type of pathway towards kind of loosening restrictions.
Well, Theo, I mean, it begs the question, what's the COVID situation like there? I mean, is COVID spreading like wildfire through these protests? Are they all giving it to each other? Is Ottawa right now in kind of an emergency lockdown situation? Is everyone getting COVID? Or could they just do away with the vaccine mandates at this point?
Well, I mean, we've had sort of the same sort of wave, Omicron wave, as other countries have had, including the U.S. It's just that in Canada, the restrictions around COVID are just much more draconian, really. I mean, in Quebec, just a few weeks ago, there were curfews. Canadian authorities have responded to COVID now for 2 years. With much more restrictive, lockdowns than the U.S., and that's just the path that they've taken. Essentially, the difference between Canada and the U.S. Is that Canada's death rate has been a lot lower than the U.S. death rate. So Canadians have chosen a lower death rate, the path of lower death rate, but the cost of that has been much more severe restrictions. But you're seeing quite a bit of a pushback now, given that a lot of other countries are starting to loosen up a bit.
All right. Thank you so much to Theo Argytes, Bloomberg's Ottawa bureau chief. Appreciate you waking up early for us this morning. And coming up later today, we're going to continue the conversation around supply chains, the impact of COVID-19 with Port of Los Angeles Executive Director Gene Soroka. That's at 10:30 a.m. in New York, 3:30 p.m. in London. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon. Can ESA help humanity take its next giant leap?
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lines in New York and Anna Edwards in London. It is that time of the program when we commune with our creator. Tom Keene joins us, co-anchor of Bloomberg Surveillance, with a look at wages, which has been, a really hot topic, Tom, because, and it's been very political, right? Because Biden at one point claimed basically that he was able to boost wages faster than inflation.
Yeah.
It's a little iffy depending on which chart you look at.
One of the best hires Bloomberg ever did was the heartthrob Matt Boesler. He walked in the door and everybody quaked Matt Miller, and he does great in economics. His first job was covering the New York Fed, and he has a really profound statement which is perfectly seen in this chart. Average hourly earnings weekly adjusted for inflation, and what Boesler's saying, I'll let you pronounce it, Matt, is get over it. Real wages had a huge surge off the pandemic, and yes, we've come down to real weekly paychecks that are ugly, but we must forget there was a real wage boost along the way.
Yeah, Matt Boesler. I think Boesler is the way he pronounces it.
Thank you.
Okay, we'll copy you. We'll copy you, Matt. Yeah, it's a really interesting one. And one of the things we watch every time we get inflation data, Tom, and we've often seen economists getting things wrong on inflation in that they've been under forecasting where inflation will get to. And one of the explanations we hear is it's just really difficult to say what people will do with all those accumulated paychecks, all that money that sits in a very aggregate sense on people's and companies' balance sheets. Estimating how much of that they will then plow back into the economy has been really difficult.
The answer is we believe less. The savings debate, Anna, is legitimate, and it's really contentious. I don't have a strong opinion on that. We just talk to the experts that we can. Some saying savings is worn out. People have worn out. Jim Glassman at JP Morgan suggesting people have to get back to work. But the savings debate is there. What I would say is on the institutional side, we've got money up to the eyeballs.
All right, valuable insight as always. Tom Keene, co-anchor of Bloomberg Surveillance. Thank you. And just a trick for you, think Boesler, like bow ties. I think that'll maybe work out. Now look at what else we're watching today. I am watching the Big Take story out today. You can find it on NI Big Take as well as online because it focuses on the Super Bowl and the NFL, two of my favorite things, Matt Miller. I know you're watching this too, and just the history of sports betting within the league, how it was kind of reluctant to get into the gambling sphere early on, but now it has fully embraced it to the point where you're seeing some of these online betting companies sponsoring lounges and stadiums. You have owners now investing in businesses like DraftKings. You can even bet on whether Joey B is going to complete his first pass in the game on Sunday. So it's definitely something to watch.
You can bet on the color of Gatorade that is dumped on the coach after the game. You can bet on everything. I grew up in London with a flat full of bros who were betting on cricket and rugby all day long, totally addicted, and this is, of course, what the gambling companies want. The question is this good for the NFL? Is it possible to keep corruption out of the league? And it's not just the NFL, right? It's leagues like the NCAA, which have had issues with corruption in the past. So I guess it's concerning. On the other hand, I really want to place bets.
You do want to place bets. I mean, 15 years ago, we liberalised things here in the UK when it comes to betting, certainly in football or in soccer. And so we have that experience to go on. And actually, we're looking to the UK government to actually cut back the power of some of these businesses to sponsor and to put money into the game, certainly on shirt sponsorship. That's a big focus here in terms of English football, for what it's worth. Anyway, we hope it goes well for the NFL. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
We're going to have a very volatile but trendless market.
We're in sort of a mini bond bear market already.
We're in a rising rate environment everywhere.
I think corporate America can handle higher yields.
Markets for the first time in quite some time are facing less liquidity and tightening economy overall.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Can we burn the masks? From New York City, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures right now up 0.7% on the S&P. TK, are we moving on from Omicron?
Well, you see that, and maybe you see that in the market as well. We'll get to the market in a moment, but I agree. For us local today, John, Governor Hochul has some tough decisions to make, and I believe a Wednesday announcement on lose the mask indoors in New York is maybe where we're at.
Is it the politics or the science or both? I got a message last night, Tom, that the Democrats are finding a different variant. It's called the midterms.
I don't agree. I mean, I do agree. Excuse me. I do agree with that.
Make your mind up.
Well, yeah, I do agree with that. It's the Orangina. Leave me alone. I do agree with, and yes, folks, I like Tang better than Orangina. Let's move on. John, I think the politics here is tangible, but what I'd really note, and I read this out of San Francisco last night, is it's going to do is devolve county to county. So I'm worried about what are they going to do on mask mandates above 59th Street.
Lisa, the schools. That's what you're worried about. That's what you're wondering.
Yeah, in 2 weeks that expires. So are they going to renew the mask mandate in schools? Just to your question, though, is this politics? Is this the midterm election that's a new variant? Or is this really a scientifically driven response? I do find it fascinating that this move comes after a series of polls show that Americans are more tired of the pandemic and would like to see some of the aspects dropped than they are worried about death and destruction. So it does seem like the population is moving on.
Do you think that's contributing to this lift in this equity market this morning, Lisa, or would you not take it that far?
I wouldn't take it that far. This feels like a buy the dip moment where people are reassessing whether people got overly hawkish in the recent sell-off. And, on that level, I can't imagine that people in the market actually care about the pandemic anymore because basically they've shrugged that off for months.
This market's shrugging everything off, Tom, settling down in the bond market and in the equity market too.
Nuanced, and maybe the inflation report tomorrow is bigger than the jobs report on Friday. It's nuanced, John, and what I would suggest with a nice equity market lift, we can go into that in a moment, but John, far more than that is once again, foreign exchange doesn't signal, and to me that's a vote of confidence that we won't get 5, 6, 7, 8, 9, 10 rate hikes.
The euro dollar positive 0.2% at 114.39. Equity futures up 0.7 on the S&P, and Lisa, yields in down down, lower 3 basis points to 192.88 on 10s.
How much is the move that we're seeing in the bond market today a reassessment of just how hawkish Fed and ECB officials really will be? We'll get some guidance today. We're going to hear from Fed Governor Michelle Bowman as well as Fed Cleveland President Loretta Mester. They're speaking at 10:30 a.m. and 12 p.m. noon Eastern time, respectively, ahead of that CPI report that you were just talking about that comes out tomorrow. The expectation is for 7.3% inflation. Consumer prices increasing that much would be the highest level going back decades to the early 1980s. How does this factor in, though? This is what I'm watching, to the real yield discussion and to the real wage discussion. How much are wages actually dropping on a real basis, which leads to this consumer dissatisfaction that we continue to see in a number of surveys, including the University of Michigan survey, which comes up Friday. On 2:30 p.m., President Biden is meeting with a slew of CEOs of electric utilities, including AEP, including Duke Energy. How do they invest in order to avoid the spiking gasoline prices disrupting the economy that we're seeing right now? AAA gasoline prices rising to the highest in the United States going back for about 7 years, now almost $3.50 on average. This is a huge problem also for the variant, as you said, John, that is called the midterms. And aftermarket, Disney is reporting earnings. Chief Executive Officer Bob Chapek is expected to join Bloomberg Television around 5:30 p.m. How are they dealing with the resurgence back to their parks? Is that a viable place to really go? And how much are you seeing that pick up in terms of people expecting the pandemic to be over? Then, of course, the streaming wars. Are they won? Are they fought? Is content still king? John, we'll get some sense of that, especially after Netflix's lack of growth that we saw last week.
Netflix had a tough time, didn't it? New Kardashians coming to Hulu, which I know you're excited about.
You would know that.
In April.
I almost took the day off over that.
That's amazing.
In April. I understand on the international scene, Tom, that will stream on Disney Plus. So I'm told.
Who?
Disney Plus, the Kardashians.
The Kardashians.
And Hulu.
Okay.
Later this spring. That's your promo.
Thank you for that.
Anytime, Kendall, anytime. Futures up 7/10 on the S&P 500. Joining us now is Jens Nordvik, founder and CEO of Exante Data. Jens, this came from the ECB's Villeroy. He said this: I wouldn't deduce from what has happened in recent days that there is an ECB calendar that corresponds to an underlying calendar of markets. Went on to say there were perhaps reactions that were very high and too high in recent days. What do you make of that, Jens? Is that the ECB pushing back a bit here?
Well, so the ECB clearly signaled that a shift is coming, right? So the question is how big that shift is. But I think we have to put in perspective here. We've not had ECB tightening since 2011, really, right? So if the ECB is heading to proper tightening this year, it's a historical thing. And we can discuss whether they're going to be ready to raise rates in September or December, what the specific timing is. But I think the bottom line is that this is going to be a year of big change for the ECB. And the sort of tweaks in the communication are tactical around that.
You think it could be a year of euro outperformance, Jens? What's going to drive that?
Well, so when the ECB first went into negative interest rates in 2014 and then did their first ever QE in 2015, we had very, very pronounced euro weakness, 20% against the dollar, but also very significant moves against other global currencies. So the euro has kind of been on a almost like long-term hangover from those policies since then. And therefore, if there's a reversal, it could be very, very important.
Jens, I look at where we are, and let's go to Denmark, which has to deal with what we see with your Denmark, with what they have to deal with Lagarde, the big countries like Germany. And I'm going to nail this, John. Hvor er den neutral kurs? Jens, where's the neutral rate? We don't have a clue, do we?
I think that's actually a very key part of this cycle.
Better in Danish, too.
Yeah, your Danish was a little bit unusual, actually. But the one thing investors are searching for is some clue about what the terminal rate is, right? So essentially what you've seen happening in yield curves around the world over the last couple of months is that we've been willing to front load a lot of tightening. We've seen in the US, we've seen in the UK, and we're starting to see it in Europe, right, where the ECB is priced to hike 50 basis points this year. But what the market has really not been willing to do is to say, okay, this is going to be a sustained tightening cycle that takes policy rates to relatively higher levels, perhaps higher than they were in the previous US cycle, right? And that's because there's this ingrained doubt that the market can take any hikes at all. And I think that's a debate that's still out there, and that has not been changing just because we have been pricing in aggressive Fed tightening. We still have low terminal rate. And is there a lot of good academic work on what the terminal rate really is? No.
Yeah.
So
Yeah.
I think this is something we're all searching for.
Jens, there's a debate right now about the path to dollar weakness in terms of the euro gaining steam in the front loading in the U.S. Will the front loading lead to a weakening in the U.S. economy, or will it lead just simply to the Fed to back off and allow a slow, gradual normalization, a sort of Goldilocks scenario that a lot of people are hoping for?
Yeah, so the first thing I would say is that we've been pricing just incrementally more hikes, right? A couple of months ago, we barely had one hike priced, and now we're sniffing at 5, right? So we're moving pretty fast. So if we kind of knew that there's a limit to how much would really be realistic, whether it was 5 or 6, then we could kind of say, okay, that Fed support for the dollar is going to be short-lived, and eventually there's going to be other factors dominating, stronger global growth and so forth, ECB tightening. But the problem is the ECB is sending a signal, but at the same time, the Fed is not willing to say, okay, too much is priced. We've not had any pushback on market pricing from the Fed, and we continue to price more and more. And I think we could certainly be on a path where we have consecutive hikes in March and May, right? And then the market will think about a 7-hike scenario, and then it's not going to price it fully. But we continue to price incremental hawkishness, and that's sort of been part of the reason why we haven't been able to see the dollar stop rallying. Can I make one more point?
Of course.
Yeah, the issue, I think, for the U.S. outlook is essentially the point that Lisa made in the introduction around real wages, right? So we are at a point in the cycle where inflation is a major issue. The Fed is responding to that. But if you look at the real economy, disposable income growth is heading into trouble, right? So growth expectations are actually coming down. You can look at Bloomberg consensus, been coming down for like 9 months now. So from that perspective, at some point, the growth effect is going to start to worry at least some people on the FOMC. And that could be really important for the turn in the dollar.
Just finally, since I let you go a little bit longer, can you teach Tom some Danish? Some proper Danish, Jens. Just give him a line. Just give him a line.
Eric Nielsen emails in and says, don't even try.
It's not an easy language. It's spelled like it was 500 years ago, and
so that's a no.
Can't even read it.
He can't help Tom.
We framed that from earlier this morning, though. Your Danish is unusual. Jens Nordvig of Exante Data. Jens, thank you very much. Tom, what were you trying to say? Where is the neutral rate?
Where is the neutral rate? Nobody knows. And what Jens said, folks, let's be serious here. He's one of the greatest young academics we have on Europe. His book was Titanic a decade ago. John, this is real simple, and Nordvig said it. We don't know where the terminal rate is on anything. And that's why we're flying blind every morning.
I can't believe that book is 10 years old already, Tom. That's quite frightening. Time has flown by. I think it is that long. I think it is that long. Yeah. My second point here, Lisa, just to make it very simple for the people who don't really understand outside of this world what we're talking about here, just how far the ECB can take things, how far the Federal Reserve can take things before ultimately they have to stop.
Yeah, before something breaks and the yield curve's flattening or not setting a good signal. I will say, though, Tom, you should write a book. Just what is the terminal rate? We don't know.
In every
language. Yeah, in every language around the world. Exactly.
Thank you.
Your Danish is
unusual. Right there with Mark Crumpton.
Futures up 31 on the S&P, up 0.7%, up 0.9 on the Nasdaq 100. There is a lift this morning. Good morning to you all. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Hong Kong reported a record of more than 1,100 new coronavirus cases today. Many were linked to family gatherings during the Lunar New Year. Emergency services are said to be overwhelmed. In New York, the state reportedly will drop its stringent indoor mask mandate. That's according to the New York Times. The mandate requires businesses to ask customers for proof of full vaccination or require mask wearing. Protesters blocking traffic between Canada and Detroit are further stretching an auto supply chain that's already worn thin. Automakers indicate there's been little impact so far, but the situation could get worse within days. The demonstrators are showing their opposition to vaccine rules. China came up more than 1/3 short of its purchase commitments for goods in the trade deal with the U.S. That agreement was reached during the Trump administration. Bloomberg analyzed U.S. government data and found that China bought 63% of the extra goods it had promised as part of $200 billion in purchases. The Biden administration has said it would hold China accountable. And Toyota has maintained its profit forecast for the fiscal year ending in March. The Japanese automaker stuck to a conservative outlook whilst it faces persistent disruptions from COVID and the chip shortage. Toyota sees various factors driving earnings, favorable exchange rates, strong demand, and rising prices. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Earnings season continues.
Not since the 1980s have we seen these sorts of reversals.
Bloomberg is fastest with the numbers and analysis.
The fundamental story is really solid.
It's really kind of a balancing act.
Bloomberg, the fastest numbers and analysis you trust.
We still don't have any prediction of what President Putin will do. We can't control what Russia will do next. What we can do, and what I think President Macron played a role in doing yesterday, is making clear with our allies and partners that there will be massive consequences.
Jen Psaki there, the White House press secretary from New York with Tom Keene, Lisa Abramowitz and Jonathan Ferro. Your equity market up higher by 0.7% on the S&P, on the NASDAQ. Up nicely by 0.9%. Yields in 4 basis points. Yields lower in Italy as well. 192.16 on 10s at the moment. Euro dollar positive 0.2%. Euro dollar 114.34. Crude down 5 or 0.6% to 88.87. Bit of news, Tom, from Punchbowl. Speaker Pelosi working on Congress members' stocks trading ban, perhaps getting behind an effort of Senator Schumer recently.
I take the word trading seriously, John, and it's a definition of what trading is. Will they be allowed to own equities in the spirit of American capitalism, or are they going to be able to day trade off their committee meetings? I mean, that's really what this comes down to. Let me do the mask here, John, and you can dive in with Anne-Marie on the trading. Anne-Marie Horton joins us, our Bloomberg Washington correspondent. Anne-Marie, we're going to hear from the governor of New York scheduled for today. We've heard from Oregon and others about an end to the mask mandate. And the CDC, with a thud, came out and said, now is not the moment. I'm lost. It's like the backside of Albert Camus' The Plague. What's the level of mask chaos at the White House and, frankly, inside the Beltway?
Well, Jen Psaki, the press secretary, gets questions on this every day, especially the last 2 days, given we saw this in a number of Democratic states, including California and New Jersey, about lifting of these mask mandates. And the New York Times saying that Governor Hochul of New York is going to be doing the same today between the mask and vax mandates. And what Jen Psaki continues to say is she puts the finger on the CDC. Those questions need to go to the CDC. We will continue to provide the guidance that the CDC provides. So you just have to beg the question of whether or not this is scientifically motivated or is this politically motivated? Because if the CDC hasn't yet to move, but states are moving, is this because it is ahead of midterms elections? Jonathan mentioned at the top of the show, and so did Lisa, in terms of the polls. The electorate is kind of over these masks.
Anne-Marie, it's a cornucopia of issues trying to get to the midterms, whether it's the mask mandates, whether it's what's going on with inflation, or whether it's this trading ban situation. Is that what we're seeing right now with Schumer actually kind of shifting gears and taking a much harder line on this?
Yeah, and you have Republicans as well, right? The House Republican leader Kevin McCarthy has been wanting to do this, and he was maybe potentially Speaker Pelosi that was getting in the way. Jonathan was just noting what Punchbowl News is talking about. Maybe Speaker Pelosi's on board now, because that is the direction of travel, that if the Republicans are saying, well, if we retain control of Congress and we were able to get back control of Congress, this is one of the first things we are going to do, and the Democrats are unwilling to do it. So it does look like a number of people who are potentially on the sidelines on this are coming on board. So this might actually have bipartisan support. And this wouldn't just be on individual lawmakers. What the Senator Ossoff is drafting up would be on family members as well. So this would go further than some of the legislation that's already on the books.
I feel like this is legislative whack-a-mole that we're playing today, but honestly, that's what it feels like in Washington, D.C. with the Democrats and the various issues that you're trying to cater to. And this brings us to where President Biden's going to be today at 2:30 p.m. when he actually meets with the head of utilities to try to talk about Build Back Better. I mean, come on, what's going on? Are they actually going to break this off and do something with it, or is this just another one of the issues to put into whack-a-mole Congress?
So, Lisa, I doubt he's even going to utter the words "build back better." I think there's been a tactical shift at the White House to not actually use that term anymore, but just talk about the issues and the potential chunks that were originally supposed to be part of that legislation that they can see get through. Because Senator Manchin has said how many times that legislation as one cohesive piece of legislation is dead. So today what the president is going to talk about is climate initiatives. About $300 billion would be going towards solar, wind, all these kind of potential issues and provisions to also boost the grid, et cetera. And you need these massive utility companies. But he's doing what he did last week, and he's bringing in corporate America to help sell his message, because clearly last year they weren't able to do it.
And Marie, we're going to talk about this in the next hour. Maria Tadeo is going to join us with you. She's out at some 3-hour European lunch right now. But let me get out front of it as well. From your view at the White House, is the relationship between Biden and Macron changed in the last 48 hours?
There's been a lot of questions about this. Is the White House annoyed that Macron has kind of gone on this Euro tour of diplomacy? But Jen Psaki will say that that's not true, especially given the fact that between the last Wednesday and today, they spoke at least 3 times. And Secretary Blinken, on his way to Australia, he's going to be meeting with the so-called Quad members, had said that there has been a tabulation of 200 at least when it comes to virtual meetings, phone calls, in-person meetings with their allies in regarding what are they going to do with Ukraine. So I think they want to show a united front. Potentially, they think maybe Macron has gone a little bit overboard in his charm offensive. They would not say that publicly. But for the most part, Macron has kept up to date in terms of his allies. He had phone calls with President Biden. He also met last night with Chancellor Scholz.
Kardashian superfan and Washington correspondent, Bloomberg's AMH.
I am not a Kardashian superfan.
DC.
That's for you, Jonathan. We all know that.
Thank you very much. We appreciate your time, as always.
Trash talking each other.
Elisa, we have been going around the world. Diplomacy, serious diplomacy, to try and work out what's going to happen here. Have we made some breakthroughs in the last couple of days?
Honestly, I have a lot of difficulty trying to understand the different rhetoric. What was said between Emmanuel Macron and Vladimir Putin? Where do the alliances stand in terms of how closely aligned Germany is with the U.S. on Nord Stream 2? What does it mean that it won't be operational, considering the fact that it seems highly unlikely they'll just completely ditch the plan? I have a hard time understanding exactly where we are in this.
Can we conclude on this one that Tom is jealous of the way Europeans do things, the length of the vacations, the length of the lunches they take?
Oh, Johnny,
and TK, that's why you always bring it up.
I bring it up, and I'm jealous, and I'm also wrong. Massive surveillance correction to Maria Tadeo and all of hardworking Brussels. There's a unit out there. You know, they measure this stuff across Europe. They measure it in the Bloomberg building as well. What is the length of a lunch? Brussels has the shortest lunch in the EU, 22 minutes. I had no idea, John. I'm absolutely stunned.
They've actually surveyed this, TK.
Oh, yeah, they have surveys
of this.
Who has the longest lunch?
The Bloomberg building in London, you know.
But I can't tell who's telling the truth here based on... Have you seen the survey, Lisa?
No, is it actually
this survey actually exists, Tom?
I would guess that the shortest lunch, yes, well, of course we're making it up. I would guess the shortest lunch is in Germany, and the longest lunch, I'm going to go ahead and guess, is in France and Spain. What do you think?
Playing up stereotypes, that's just not what I'm about. I expected better from
I expected better
from both of you.
So sensitive.
I expected better from both of you.
You know,
Futures
John,
up
are
7
you going to be
cents.
on Revenge Body? That's what I want to know.
He's taking the moral high ground.
That is a great program. It's
With
very
Revenge
serious,
Body.
Tom, about working out and having a proper diet, and I think Chloe does a great job.
Yes, they called me and they said...
I'd love to see you on Revenge Bodies.
I should. Yeah.
What 92.34 on 10s? You would lower 4 basis points. This is serious stuff. This is Bloomberg.
this chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Lisa's got data, so let's clean this up. Lisa, data. Who has the longest lunch?
Greece and France are actually,
is it?
yeah, Greece is 3 hours. So
3
that's
hours?
number one, yeah. And Spain is 3 hours, France is 2
And who
hours.
has the shortest?
I mean, us.
Was this a survey?
There isn't a survey. I wasn't looking up who has the shortest so that I
You
could
just
feel.
look at who had the longest?
Yeah, of course.
3 hours for lunch. That's insane. Futures up 7/10 on the S&P.
The official surveillance
We're going to come back
word.
to this. It's not the final word on any of this. The S&P 500 up 0.7%. The Nasdaq 100 with a really tiny lift here, up 0.9%. On the S&P year to date, coming into today, down about 5% or so, and taking another bite out of the losses, it seems, in the early part of trading. If you look at the bond market, backing away from recent highs as well. Yesterday on 10s, inching closer to that line in the sand, 2%, 196.86, the highs of the session. Right now, 192.34. They were the highs yesterday. We come in 4 basis points on 10s, on 30s too. On 2s, we come in about 2 basis points. Just setting the tone here going into CPI tomorrow. That's got to be the big one. And Lisa, I'm hearing a lot of people talking about this. Just the balance of risks here. Do we move more on a downside surprise or an upside surprise, with an estimate at the moment that's about 7.3% on inflation?
And how much have we already taken away some of the surprise if it's a downside surprise to the economic data? In other words, is the buy the dip that we're seeing in bonds today a complete reaction to that imbalance that people were saying that there probably will be a bigger market response to a downside surprise?
Looking ahead to that. Looking ahead to some Fed speak as well through this morning, really setting the tone for the CPI print and how we respond to it going into March and that big decision for this Federal Reserve in the middle of that month. The ECB later this year will have a decision to make as well. And if you look at the European debt market, just switch on the board briefly, we'll take a look at Italy. Backing away, 7 straight days yields higher. This morning, yields lower, down by 4 to 180. Tom, the ECB, the governing council member from France, just pushing back a little bit at the price action we've seen over the last week or so. Some soothing words for this bond market. Whether that sticks or not, TK, remains to be seen.
Managing the message, and we saw that little dribs and drabs out of Europe. Futures up 32, the VIX 20.82. We haven't gotten to a 19 handle on the VIX. Right now, what we're going to say is this. The research has gotten better since the crisis, 2007, 2008. Is a broad statement. Research is better. But then there are every once in a while exceptional pieces where you go, well, this ruins my afternoon. I've got to read every word. I do that with Alex Schiller, Danny Newman, and Rebecca Patterson at the Bridgewater Shop. They wrote a brilliant, brilliant note on the dynamics of what we've got with rate changes and balance sheet changes at our central bank. We're honored that Rebecca Patterson of Bridgewater joins us this morning. Rebecca, congratulations on a thought-provoking note. How does all of this monetary dynamics, think of the mathematics of, say, Richard Claret of Columbia and ex-Fed, how does all of that fold into your guesstimate on what economic growth will do?
Well, first of all, thank you so much, Tom. That was very kind of you, so early in the morning, especially.
I'm only kind early in the morning.
So in terms of the Fed, I really think they're in one of the most difficult situations in our lifetimes, in that you still have very strong nominal demand. Even if growth moderates a little bit this year, we expect nominal demand is going to be nominal GDP will be well over consensus expectations. Right. But also you have inflation well over expectations. And our view is 12 months from now, CPI is probably going to be closer to a 5 figure, not the 3-ish that consensus is looking for. And so what does the Fed do? If they tighten too much, they risk slowing down the economy, starting a recession. They don't want to do that. They're dealing with pandemic-related data, which doesn't give them as much confidence in their view. And they're scarred, I'm being generous here, by 2018. The tightening, both rates and quantitative tightening, gave us a 20% sell-off. So they don't want to go too fast, but they also want to make sure inflation expectations don't get de-anchored. So our view is that you are going to see more rate hikes than what has been priced in so far over the next couple of years, but not as much as needed to get inflation back down to that 2% target.
I love the nominal analysis. It reminds me of Kudlow at Bear Stearns a million years ago. And I want to take it over to a guy named Dalio, who's looked at the social dynamics, the social aspects of this. His recent interview with David Rubenstein, I thought, was illuminating. Rebecca Patterson, if we get a 5% inflation rate, what is the societal dispersion, the effect of 5% inflation between the haves and the have-nots?
It's a great point. And I think it's something the Fed is also looking at. Yes. And one of the reasons they're going to lean relatively more on balance sheet rather than rates is because when you raise rates, you are going to hit small businesses relatively more. You are going to hit that lower socioeconomic cohort more because they rely relatively more on credit cards. So that's one of the reasons the Fed would prefer to do a balance of these tools rather than just rate hikes. But as we're looking at the different quintiles, if you will, of wealth in the United States today, one good thing, great thing, is that the fiscal transfers we got in 2020 and 2021 have created more wealth for everybody. You have seen wealth at the bottom cohort go up significantly. Their balance sheets are stronger. Their debt levels are relatively lower. They're seeing big wage increases. And so high inflation, especially gas prices, energy prices, food prices, those are the big ones. They're definitely going to be a problem, but at least it's happening against this backdrop where the starting point is so much stronger than it has been coming out of past recessions.
This dynamic, however, Rebecca, of negative real wage growth, particularly at the lower income levels, is one of the reasons why people are saying we won't get to that 5% level in 12 months. It'll be much lower than that because realistically, the economy will have to slow, and we're seeing that in consumer sentiment data. How do you push back against that?
Well, I think that we are going to see stronger nominal growth this year for a couple of reasons. One is the reopening itself. So as Omicron continues to fade, hopefully we have no new variants, we are going to see people going out to restaurants more, spending more on travel, et cetera. And yes, part of that is a shift from goods to services, but overall, we think that continues to support growth. I think even more importantly, we think we'll continue to see an inventory rebuild. Now, how it affects GDP is a little bit wonky. I don't want to go into that right now. But I do think that inventory rebuild will continue to create demand, which will create jobs, which will create incomes and spending. And then third, we think we're just in the early stages of a CapEx cycle, which recent years has been mainly tech. We think it's going to be fairly broad-based, and that's also going to be a support for growth. You still have 11 million job openings out there right now. And while the pandemic slowing down is going to bring some people back to the labor market, we think to get all those people back in, to reduce that gap, we are going to see significantly higher wages. We think the wage growth is going to be sticky. We think commodity prices are likely to be sticky. We think house prices will be sticky. All of those simply because supply can't meet demand.
Well, Rebecca, within this scenario, here's what I'm struggling with. 5% inflation 12 months out means a serious bond market sell-off. It means a complete recalibration of longer-term real yields, of longer-term base rates that the Fed can really address. How can the market continue to climb and the economy continue to be stronger than it has been pre-pandemic with that type of market turmoil?
I think you just hit the nail on the head. What I think we're shifting into right now is really an inflection point versus the last 20, 30 years. We had central banks fighting deflationary risks. Bond yields were falling kind of structurally, and that was pushing people out into more risky assets, out into more stocks, and specifically longer duration stocks, because they benefit from that liquidity. So where we were left is investors long bonds, long tech and growth stocks specifically, and guess who has the most of those? The US. So now we're seeing a reversal of that entire thing. We're seeing higher inflation, pushing central banks to tighten, pushing people out of those long duration stocks, pushing people out of those bonds. I think that leaves the US stock market relatively more vulnerable than a lot of markets overseas. We're not bearish on US equities, but we think that the opportunity this year, for the first time in many years, is going to be more outside the U.S. than in, for those reasons I just cited.
Rebecca, I want to go back to your dark and clouded past and talk dollar and foreign exchange as well. To me, it's amazing, the foreign exchange tightness, the range-bound nature of it. When it breaks, which way does dollar break?
Oh, we're wrestling with that one internally. Right now we have a mixed view on the dollar. We're bearish on the dollar against some of these currencies that we think will benefit relatively more from commodity rises from that inflation cycle. And then we're bullish dollar against some of the other reserve currencies, especially where the central banks don't face the same amount of pressure. Japan would obviously be a good example of that, or something like China, where we see them actually easing, and we think there's more easing to come. The really interesting thing, Tom, right now with the dollar is that you do have this Fed tightening cycle just warming up right now, and higher yields traditionally have been a big support for a currency, but we also have a pretty wide current account deficit, so a big external financing need. And when I just mentioned a minute ago about all these people who've gone into the US, foreign allocations to US stocks and bonds today are the highest they've been since the mid-'80s. And so if we see that foreign money, maybe not all of it, but a piece of that coming out, harder to finance our current account deficit, that's going to be a pretty big bearish dollar pressure. And I think that is part of the reason in January, possibly, that we saw a dollar weaker despite yields going up, was that tech sell-off and some of those foreign investors maybe pulling back a bit. So I think it's going to be a much more unusual year for the dollar than you'd normally expect in a tightening cycle. Again, just watch the money, watch where you see the foreign capital going in and out of US bonds and U.S. stocks.
Rebecca, that was a clinic. Thank you. Rebecca Patterson there of Bridgewater. We appreciate it. Europe, a big piece of this story. The team over at Morgan Stanley over in Europe saying this, Tom. We expect EU equity outperformance to continue given a fairly benign macro backdrop, bullish EPS trends and PE ratios that have largely normalized already. The ECB pivot reinforces value rotation and we stay overweight the financials, commodities, telecoms, and a FTSE.
In the overlay of this, John, to our global Wall Street audience, you're better at this than I am, but the EU banks are struggling. I mean, BNP Paribas trying to find cost cuts. Credit Suisse, where are they in one quarter?
That pickup in rates, though, Tom, unlocking some value in a big way. We can discuss that another time. Tom Keene, Lisa Brambitz and Jonathan Ferro. Futures up 0.7% on S&P. A lift on the NASDAQ, up almost 1% from New York. This is Bloomberg.
Gupta. A New York judge has granted bail for 2 people charged with trying to launder billions of dollars worth of Bitcoin. The cryptocurrency was stolen in a 2016 hack of the Bitfinex currency exchange. Ilya Lichtenstein and Heather Morgan were arrested yesterday. The government says it seized about $3.6 billion of cryptocurrency from the couple. President Biden steps up his push for more government spending on energy and climate measures. The president meets today with the leaders of some of the nation's largest electric utilities. The president's economic agenda includes $300 billion in tax credits for wind and solar power, nuclear plants, and other items that have been backed by utilities. And in the UK, Prime Minister Boris Johnson is trying to shore up support within the Conservative Party. Johnson has put Jacob Rees-Mogg in charge of delivering the benefits of Brexit. It was part of a mini shuffle of ministers in an attempt by Johnson to ride out the political storm from a series of scandals. Fund manager Mark Spitznagel says that even after a correction in tech stocks and surging yields on U.S. government bonds, investors still don't understand the risks that they're taking. Spitznagel manages the best-known hedge fund protecting against so-called black swan events.
Today, when people think that the Fed is on this great hawkish tightening cycle, I think there's a profound lack of appreciation for how dangerous the market is and how embedded all of this liquidity is in the financial system.
Spitznagel says asset prices have been grossly inflated by years of rock-bottom interest rates and quantitative easing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
biologically impossible to eradicate or eliminate an efficiently spreading respiratory virus that has an animal host. So COVID-0 was wrong from the beginning. If someone wrote that on an essay question on a test, I would say that's a wrong answer to how you deal with this type of a virus.
That's the view from Dr. Amish Adalja, the Johns Hopkins Center for Health Security Senior Scholar, with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market's higher by 1% on the Nasdaq 100, on the S&P up 0.75%. We're doing nicely today. Equities up, yields going the other way, lower, down, negative 4 basis points on 10s to 192.52. Crude a bit softer too, now comfortably south of 90, 88.94 on WTI. And euro dollar just about positive as BTP yields back away, come back in a bit. Euro dollar 114.32, positive there, a little more than 0.1%. Tom Keene, let's sit on the contrast between what's about to happen in New York, according to the New York Times. Governor Hochul said to step in and get rid of that mask mandate, and what's happening elsewhere in Hong Kong, in China.
It is a different world, and frankly, Hong Kong, a different world from the Olympics in Beijing. We get an update, a needed update on global Wall Street, banking, and Hong Kong from our Enda Curran. And it's an absolute shock. We're from a distance from what you are living, but to see that there's exactly 3 nonstop flights from Hong Kong to Singapore, 1,600 miles off of Singapore Air with no flights by Cathay Pacific is jaw-dropping. Is Hong Kong moving to Singapore?
Well, Hong Kong, Tom, as you know, has always been branded as Asia's world city, but it's been dubbed on social media these days as Asia's isolated city. I mean, the airport is effectively shut, as is the crossing going into mainland China. So Hong Kong is stuck in the worst of both worlds, and it is absolutely hammering sentiment towards Hong Kong, hammering sentiment within Hong Kong, and absolutely having an impact on the economy. And to your point about, you know, people moving out of Hong Kong, they are leaving in their droves. The expatriate community are leaving for roles elsewhere, be it in regional Asia or back to where they came from in the first place. And of course, then there are those who are leaving because of concerns over civil liberties with the political backdrop and the crackdown that's been happening here over the past few years. So when you take it all together, you would have to say sentiment towards Hong Kong as a major financial hub right now is certainly at a low point.
With immense respect for what you, Tanya Chen, and others at Bloomberg Hong Kong are putting up with, what is your x-axis? What is your timeline to when things get better in Hong Kong with this pandemic?
Well, Tom, you know, before we can even think about it, it feels like we've gone back to where we started, because Hong Kong this week has announced another raft of very strict restrictions on movement and on activities around the city here. Everything from playgrounds through to bars are closed or under restrictions. That's where we started in January 2020, and here we are now 2+ years later, and we don't seem to yet have an end game. Now, the government, of course, does talk about, they point towards vaccinations being a way out of this. The vaccination rate has been lagging here. It's picking up now. They do say that ultimately they do want to transition away from this COVID. It's a dynamic zero policy that they describe it as. But of course, on the ground, that's not what's happening. The restrictions continue, and you know, you listen to most experts. You just had one on saying that Omicron is a game changer when it comes to trying to contain these variants, and that's why Hong Kong is kind of stuck right now.
And how much social unrest is there under the surface?
I think there's a lot of anxiety on the ground. There's a lot of, I think, definitely frustration. Obviously, you have the political story, which has been going for some years now. That's concerns about the political crackdown on civil liberties. And now you have the concerns about, you know, the use of force in trying to ram through this COVID-0 strategy. And as I say to you, it keeps going back to what is the end game here. Yeah. Now, I don't think anybody, you know, there has been a health dividend that needs to be said, but you've got to question as well, what's the way out?
And there is a huge concern for the global economy, let alone just the health concerns, that later this year, if China is forced to drop its zero COVID policy, that will completely disrupt supply chains and cause a huge hit to the global economy. Have you been surprised at how little you've seen big multinational companies direct some of their trade away from China, some of their factories outside of that nation?
Yeah, Lisa, so the headline kind of story was, coming into the pandemic, there will be reshoring because of trade tariffs with the US and, of course, disruption from the pandemic. That really hasn't happened on a major scale. And in fact, I can tell you, factories from Southeast Asia have been relocating back into China. I speak to factory managers all the time. They tell me that China being open for business internally because of COVID-0 has allowed their manufacturing to remain on track and has allowed them to meet global demand for all the goods that global consumers have been buying. And that is absolutely the flip side of China's zero policy. From the outside looking in, the rest of the world certainly will question it. But from the inside looking out, one of the clear benefits, quite apart from the health dividend, has been that the manufacturing sector has kept going gangbusters. That's helped the economy recover. And of course, if that did fall over, you would certainly notice it in global supply chains.
What has real estate done? I mean, whether it's residential rents or commercial, what's the real estate dynamic given this true shock?
Well, I can tell you in Hong Kong, for example, Tom, it's been a bumper few years on the real estate story. Yeah. Prices were up. I think prices were up last year, but this year they are projected to start coming down. There are some estimates for Hong Kong real estate residential to slide by about maybe 5%. Obviously, the commercial side of things is under pressure too, because of the pandemic and structural issues as people now work from home and the rest of it. But don't forget, Fed raising interest rates also won't do a lot for Hong Kong's property market. China's property market, of course, as you know well, that's all about the crackdown on leverage. That's all about the Evergrande and the stress in the credit markets for the big property developers. We have seen prices and sales hit their slide, but that's why the policymakers there have changed gear, and they're going in the opposite direction to the Fed now and supporting the housing sector. So one would expect perhaps a floor under China's housing market this year.
Enda, thank you, sir. Stay safe. It's got to catch up, as always. Enda Curran there over in Hong Kong. James Mager of Business Week running a brilliant story, Lisa. The global economy risks a big shock without China's COVID-0 policy. This was an interesting take.
Well, basically, the idea here is you could see a health crisis and all of the shipping lines completely contract in addition to factories. Should they open up their policies and they see a rash of infections, especially if, as Amish Adalja said, there really isn't any collective immunity that can prevent that kind of pandemic wave.
The world's moving on, Tom, including Poland. The health minister in a news conference in Warsaw right now saying he's seeing the beginning of the end of the COVID-19 pandemic, and most countries at the moment seem to be on side, Tom, with that view.
Here's a summary of the math I look at every morning as an amateur. I want to point that out. Cases, great news, particularly regional dynamics, John. Hospitalizations, not great news, but really, really good news. And deaths haven't rolled over. There's great articles out there off research this morning showing Omicron, is about a huge number of people sick, and it has affected people who are older and fossils and that.
Are you describing someone in particular?
I feel lucky. I'm fully vaccinated, fully boosted. I was sick, but not as sick, I would suggest, John, is others. And they make clear within the research, that these older people dying, they're not boosted.
And that's the problem right now, TK? Is that what you see in the data?
I'm going to digress to our Johns Hopkins crew.
Okay. Well, the data we're seeing in New York right now, in New York and sitting here at the moment, Lisa, has improved in a monster way.
Which is the reason why you're seeing this mask mandate dropped as of today. Question I have, of course, is in 2 weeks, are kids going to get to throw away their masks?
Yes. And can you make a decision on one without doing the same thing with the other? Does that make sense?
I'm shrugging. I can't answer that for you.
That's the surveillance shrug.
The Bramo shrug. It's different, Tom. It's a different flavor.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, Udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame. Sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
As the company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
We're going to have a very volatile but trendless market.
We're in sort of a mini bond bear market already.
We're in a rising rate environment everywhere.
I think corporate America can handle higher yields.
Markets for the first time in quite some time are facing less liquidity and tightening economy overall.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
The mood improves for now. From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market TK higher by more than 1% on the NASDAQ, up 0.8% on the S&P.
Higher, big deal, John. 19 on a VIX would be a big deal back to January 14th, but right now 20.73 on an early morning VIX. It'll just be interesting to see if we keep this forward. I would note NASDAQ puts it on in the last hour, up 1.1%.
Speaking of big deals, Tom, how big a deal will it be if Governor Hochul backs away from that mask mandate later today?
I'm not going to say it's front and center, but it is a huge secondary story from sea to shining sea, John, on what governors are doing. I know it devolves down to counties. We'll see what New York City does in this case, but I'm sorry, it's a bigger deal than people are putting on.
It's the conclusion of the last couple of weeks, Lisa, moving on from Omicron.
Are we there yet? You asked that. How will we know when we're there yet? Is this sort of the key?
To tell you.
Well, I mean,
Who's
is this basically
sit up on TV and tell you?
So here you go. Here's your big chance. You could tell everybody. John Farrow. You can tell everyone.
I'm not going to do that for the people.
But look, I think that Governor Hochul is
well.
trying to sort of signal that, right? This sort of move toward endemic versus pandemic, which leads us to what does the post-pandemic economy really look at? And I kind of think Rebecca Patterson talking about much higher entrenched inflation than a lot of people are expecting. That is not what the market is looking at today.
I think when the local cafe doesn't behave like the TSA, and I have to go through passport control to get a coffee, Lisa, I think that maybe we've moved on.
What cafe do you go to?
I go to the. I'm not going to tell everyone which cafe I go to on a Saturday morning.
All right,
but you have to show your passport if you, like me, don't have a state ID or a driving license. That's all I've got. So I show my passport, and they look at it for 15 seconds. It's quite an experience. Futures up 35 on the S&P, up 0.8%. On the NASDAQ, up 167, up a little more than 1%. You can see that I'm very bitter about taking my passport out for coffee. Yields in 4 basis points on 10s, 192.34. And yes, I'm caffeine-free, Lisa. It's